Are heading higher, but at a more moderate pace, telling US lawmakers 2 more hikes this year is a pretty good bet. The BOE weighs a jumbo hike after UK inflation comes in hotter than expected for a 4th month. Plus, Bitcoin jumps above 30,000 for the first time since April. That's as BlackRock's surprise filing for a crypto ETF boosts optimism. Let's check in on the futures then, setting ourselves up in Europe for a 4th straight day of losses, and the pain is going to be felt certainly on the FTSE 100 as well. Those futures pointing lower by 0.8%. Across the benchmark, a similar picture, losses of 36 points. Over in Germany, German futures down by 135 points. Let's switch it over and see how things are reflecting as we open. Big day, of course, for the central banks. Yes, Jay Powell very much keeping the door open to a further 2 hikes, pointing to that dot plot of 5.6% as being the terminal rate for the Fed. The Bank of England, of course, this is such a crucial day for this central bank. Do they go 25 basis points or they go with a jumbo 50 basis points? The money market suggesting there is a 40% chance of that. The sell-off in gilts has been pronounced, of course, over the last few weeks. We look at the pound, not a lot of action today. That could change depending, of course, on what we hear from what is expected to be a very divided, a very split BOE. The Spanish IBEX down 1%, the FTSE 100 off by 64 points, back below 7,500, down 0.8%. The CAC 40 over in France as Macron gathers global leaders for his summit, down 0.9%. Cross-asset, let's zero in on the pound, on Bitcoin as well, because that's a really interesting story. Futures stateside pointing lower on the S&P E-minis by 0.3%. The sell-off yesterday, of course, on Jay Powell's hawkish commentary as he gave testimony. He will continue that today for a second day. The pound 127, just down 0.2%. How low will this currency go if you get 25 basis points, or is a surprise to the upside on 50? And what does that do for the inflation dynamics? How much of a strong pound do you need to actually break the back of UK inflation? Bitcoin 30,000, holding above that level, and the ETF filing by BlackRock really spurring the interest in terms of institutional investors getting back in. What do they know about the SEC and how they're feeling about some of these ETFs? That certainly is giving some optimism around that space. Brent, $76 a barrel, down 0.3%. Really interesting to hear from the IEA's Fatih Birol just in the last 5-10 minutes saying Europe is being overly complacent about the gas storage situation. Let's check in on gilts then on this huge day, consequential day for the Bank of England. The excruciating decision, as John Authers has put it. The 5-year currently at 4.58. The 2-year, this is where so much of the action has been at the front end, holding above that 5% level. The 10-year 4.39 and 30-year longer duration at 4.49. Keep an eye on 2s and 5s today. A rate hike then is all but certain when the BOE meets today, after we mentioned, of course, as we mentioned, after the May inflation print showed core CPI still on the rise, above 7%, now at a 31-year high. Let's bring in Bloomberg's UK correspondent, Lizzie Burden. Lizzie, what are the chances of a half-point hike from the BOE? Do they need to go through with that jumbo hike?
Well, Tom, as you say, markets now see a 40% chance that we get a half-point hike from the Bank of England today, but economists see 25 basis points. The reason that markets are seeing 50 is because, of course, we had that fourth upside inflation surprise yesterday. That's why economists aren't ruling it out. But they say it's more likely to come in August, because by then you'll have a press conference, you'll have forecasts. It'll be more easy to communicate clearly why they're going back to acting forcefully. We haven't had a jumbo hike since February. Also, by August, Silvana Tenreiro, the big dove on the committee, will have been replaced by Megan Green, who's been making hawkish noises recently. But as for today, we could see a three-way vote split. You could have Tenreiro and Swati Dhingra calling for a hold because the previous 12 hikes are still filtering through to the economy. You could see hawks like Catherine Mann and possibly also Jonathan Haskell voting for the half-point hike and the rest going for 25. We'll look to that vote split for signs, so will the market, of the future path for rates. At the moment, markets fully pricing a 6% peak rate by daily push back against the market curve. Previously, he's kind of seen it seems, as a bit grubby that the markets should respond to the bank, not vice versa. But they have made exceptions previously, like in November. Will they do it again today? Will the market ignore what the bank says in its messaging? Then it comes back to a question of credibility.
OK, Andrew Bailey may need to grasp the grubby to push back on this market pricing. Lizzie Burden with a preview there on a very big day, of course, for her central bank, the Bank of England. Thank you. Let's bring in now for the market analysis, Charles White-Thompson, CEO of Saxo UK. I don't want to lavish you with too much praise, Charles, but you pointed out to us, you reminded us that back in December, you flagged potentially 5% for the terminal rate from the BOE. It looks like we could be getting to 6% now. How have you changed? How has your view changed? You were prescient in December. You got some pushback. How are you thinking about the rate trajectory for the BOE now?
Yeah, thanks for raising that, Tom. I mean, I think that there was much mirth when we discussed 5% rates on the 15th of December here on your program. And my view remains unchanged in that inflation is public enemy number one. Inflation is a wily and a strong and a difficult enemy to deal with, and that we need to deal with it. And my concern is that we are behind the curve. And
does that mean they go 50 today? Should they? There's the should and the could. Should they go 50 today?
They should go with 50 basis points. So I think
they will go 50?
Probably not. So I think that we should see base rates at the end of the day at 5%. And I don't say that lightly because, you know, a lot of people, and also on your program, are talking about recession and things like that. I prefer to talk about or I don't prefer to, but I talk about the cost of living crisis, the consumer crisis. And that is really playing out now. And, you know, where you think that you're seeing two-year mortgage rates at 6.8%, when you look at when you read the Office for National Statistics and you look at the inflation print yesterday, which was really disappointing, you know, I find it very difficult to see any positive indicators there. I mean, people latch on to fuel for cars. That's marginal for me. I mean, if you look at food prices, there was a slight decline to 18%. But that was driven by cheese and eggs going down from 27% increase to 25%. And that is the cost of living crisis.
Where does that leave your terminal rate view then? You're at 5% in December. Where is 6%? Is that what is needed to firmly break the back of inflation in the UK?
Yeah, I think that inflation needs to be dominated. And we need to get on top of inflation and we need to dominate it. So 50 basis points today. And I think, you know, terminal rate for me is 6%. And it's pretty interesting because if you cast your mind back to the beginning of the year, it was Europe 4%, it was the UK 5%, and it was the US 6%. And now we got Europe, let's say 4%, the US 5.5%, and the UK 6%. So the UK is a laggard. And as we discussed in one of our programs together, the UK inflation is proving to be incredibly virulent.
What do you sell, what do you buy in an environment of rates at 6% in the UK? What is most vulnerable across corporate UK?
Yeah, so I think the question is about markets. And so if you look at markets this year, markets have been very generous. I mean, if you look at the equity markets, so we've seen NASDAQ up by 30%, we've seen the Nikkei up by 27%, we've seen Europe, let's say the Euro Stoxx 50 up 15%. So
UK stocks have been the laggard.
UK stocks have been the laggard. I found it difficult to be overweight UK stocks. I've been surprised by the strength of sterling. I think that that's actually not a fundamental play, it's been more of a yield play. So my view on that is that I continue to buy bonds, short-dated bonds. I mean, if you think about this, 2 days ago, there was 5-year paper with a 4.9% yield and a 4.5% coupon. I think that's good. And I think it's a fair idea to top slice some of the froth we've seen in what I call the big AI rally. So in the NASDAQ, and also what I've also noticed over the last month, you've seen a change. So you've seen the market's been led by the S&P 500 and the market's been led by the Nikkei, not Europe. So I would top slice this. And for me, it's not sell the market, it's housekeeping. Lock in some of your profits and increase your position in government bonds and corporate blue chips.
Lock in some profits, profit taking around tech, maybe on that AI rally, and clip that 4.6% coupon on the UK 5-year. Charles stays with us. Charles White-Thompson, CEO of Saxo UK. Get more of his calls just in the next couple of minutes. Coming up, you can catch our exclusive interview, worth tuning in for this one. Christian Zewing, Deutsche Bank's CEO, with Bloomberg's Guy Johnson, speaking to him about Europe's banking landscape. Stay with us. This is Bloomberg.
On the product may read made in the USA, but the sign on the CEO's door often says made in India. Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
Of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Welcome back to the Open, 12 minutes into European trading day, and the losses are quite pronounced now across the European benchmark, down more than 1%. Here in the UK, the FTSE 100 off by 82 points at 7,476. Let's bring him back. Charles White-Thompson, CEO of Saxo Bank. Charles, we were talking before the break and into the break about the pressure now across the global economy in an environment of continuing higher rates and the inflation pressures. What breaks? How much pressure is building in the system?
I think there's huge pressure. So if you think about this, the Fed, the Bank of England, and the ECB have raised rates by 1,340 points. If I'm right, at the end of the day, it'll be 1,390 to show I can do the maths on that. And I think that this pressure is everywhere. It's pressure that you can see, and it's pressure that you can't see. So, for example, if you look at junk bond failings this year, at roughly $19 billion, that's more than the last 2 years put together. If you listen to the CEO of Wells Fargo, and he talks about his his property book, you know, we should listen to people like him. And then the same in this country. We've got the consumer crisis, which we've spoken about. We've got the property market, which is under significant pressure.
Yeah.
And so I think that the pressure is significant, and that's what feeds into the way I think about life. Manage your risk, multi-asset portfolio, top slice your AI, the frothy stocks, and also within your portfolio, I think it's really important. I think a lot of people will be surprised just how big Apple, for example, is, or Microsoft is, because Microsoft will also be in the green parts of your portfolio as well. So this is housekeeping. Manage your portfolio, be prepared.
I guess the temptation is to look back at the last kind of 6 to 8 months, year to date, and you look at the upside that's come through the NASDAQ. And we were speaking to you and others at the start of this year, preaching caution, and there was a lot of rational, logical reasons for that. But some may have lost out on that 30+% upside that we've seen come through. That surprised many in terms of the NASDAQ, and the upside that's come through from the S&P as well, 20%, 8% or so in European stocks. That is the cautionary tale that for some reason, for various factors, these equity markets can power through.
Yeah, I think it's very difficult to match, 30% performance. So
you think we're done with the kind of performance we've seen year to date with the tech-heavy NASDAQ, for example, with US stocks?
I think the markets have been very generous to us.
Yeah.
I think the markets have been very kind. I think there is an argument where you top slice that. You do your housekeeping, you manage your risk.
Yeah.
And I think that I wouldn't beat yourself up too much. I think to match a NASDAQ up 30%, unless you just like put everything into a NASDAQ ETF, and that's also not the way I like to play things. I like these active managers because I think we are in a new paradigm, and I think you need to have these ChatGPT busters, as I call them, the people with life experience. I want them also running part of my money. Okay,
the case for active management in this environment may be taking some of the profit again around some of the tech upside as well. And the view that you're going to go 50 basis points from the BOE, at least should do. Charles White-Thompson, thank you very much indeed, CEO of Saxo UK. Now, Deutsche Bank CEO Christian Sewing says the lender is looking to grow and achieve a return on equity that is larger than 10% by 2025. That's after transforming the business over the last few years. Sewing spoke exclusively to Bloomberg's Guy Johnson a short while ago. Guy joins us now. Guy, what really kind of stood out to you from this sit-down?
Okay, the first impression was Christian Sewing, super confident, super positive. This is a guy that has dug his bank out of a deep hole, and it is in a very different place than it was a few years ago. So he feels completely different. He feels really quite positive. The numbers look good right now. He's got this bank back to profitability. And you can really see that in the fact that they've just made an acquisition. It is still the talk of the town here in London. The Numis acquisition caught all of us by surprise, Tom. And it really came from a place that nobody expected. And I think that is the thing that caught everybody by surprise. So the question I asked Christian was quite a simple one. Was the price just too good? Was the offer just too good that he couldn't refuse it?
I'm a big believer, and the whole management team of Deutsche Bank is a big believer that we need balanced business, not only for the overall bank. That was the reason why we did the transformation 4 years ago. Yep. Stable, well-balanced setup with 4 businesses. In each of those businesses, I again want to be balanced. And we have a very strong FIC and DCM business. Where we wanted to further invest is in the O&A business. And, we looked at Numis for a long, long time. And yes, we kept the secret quite well. And we think it's an optimal addition to our business mix and to our offerings in Europe and in particular in the UK. The UK is from a fee market pool. It's the most lucrative European market. We are adding 170 top corporate clients, and it fits beautifully to our global house bank concept. Everybody's only thinking about the investment banking offering. And yes, that's obviously something we are very much interested in, and it fits to our existing positioning in the UK. But we have a really well-functioning corporate bank. So we have 170 additional clients with Numis now, and we can offer our corporate banking products, and at the same time, we have a private bank where I think we can also do the one or the other thing. So the overall global house bank concept is fitting very well to Numis, and therefore we looked at it very carefully. I'm very glad about the job Fabrizio and the team have done, and now we concluded this, and now we need to make the final steps, right?
Are you keeping more secrets from me? Are there? You talk about the other divisions and the fact that you want to have balance. Are there other deals in the offering? If another great opportunity came along, are you still interested, or is the dry powder gone?
No, I would say, look, I think we are very careful and cautious planning team. But of course, we always said that after restructuring and positioning this bank, we are up for growth. And we always said we want to grow in more capital-light products, which is, for instance, the O&A business, and the M&A business, and the advisory business. But you have also seen that we have done senior hires, again, in corporate finance, but also in the wealth management business. So we think that we can further balance out the business at some point in time over 2-3 years. You know, we want to also, and we need to plan for a situation that NII is at some point in time, again, coming down. We need then additional income streams, and this bank is planning for that and is investing for that right now. And hence, I wouldn't tell you about secrets because you just said we're good at it, at keeping it, but that there is a clear growth strategy in parts like wealth management, origination and advisory. Yes, we are focusing on that, and with the recent hires, we've seen that.
You talk about hires on the wealth side, though. Do you see the growth there being organic? Do you see it being via acquisition of talent rather than acquisition of businesses?
Well, it's both, but I do believe that we have now such a nice positioning and such a nice structure that we really do believe that if you have a chance to acquire and get good and great talent in all kind of regions, this is a really good way in step-by-step growing your business. Claudio de Sanctis has done that very successfully in Asia, in other parts of Southern Europe. So that is a first way of growing.
If Commerzbank ever came back, would you be interested in that acquisition? They have got a huge deposit base, which in this environment is hugely attractive.
Well, we also have a huge deposit base.
Put the two together, it would be even bigger.
Yeah, but I think we have shown also during the recent volatilities in the market how firm and how stable our deposit base is. So that is not a reason to actually think about further enlarging it or acquiring somebody else. I think the full focus of Deutsche Bank is in now, after successfully delivering the transformation over the last 3 or 4 years, is now growing into an area where we have a return on equity of larger than 10%. In 2025, we are on a good way of achieving that. The first quarter of 2023 has clearly shown the strengths of Deutsche Bank, and we can control it by ourselves. We can achieve that by ourselves, and that is our focus.
Christian Sewing, the CEO of Deutsche Bank, speaking to me exclusively a few minutes ago upstairs here at Bloomberg. Tom, takeaways? Much more positive, feeling quite good about the situation going forward, will not exclude further acquisitions. He talked about the fact that maybe the Q2 drop that his CFO, James von Moltke, talked about may be actually a little bit of a blip. He sees a recovery potentially in FICC trading in the second half of the year. Volatility is going to continue.
Really, really interesting conversation with the CEO of Deutsche Bank, Guy Johnson. Thank you very much indeed with that exclusive. Now, we are going to get to break. We're going to come back, check in some of the stocks to move on a pretty bleak day across these equity markets. European benchmark down now close to 1.2%. Here in the UK, as we gear up for the BOE's decision, off by 86 points at 7,472. Stay with us. This is Bloomberg.
Okay, so you're moving in on me, quick, distracting me with your fancy hands. I'm going to deal with your knight because this is really bothering me.
Ah, my knight.
Yeah, he's a troublemaker.
Yeah.
What did you get up to this weekend?
You know, just robot stuff. A lot of chess. I was practicing for you. I know you're pretty good. Ooh, I don't like that. I will take this, put it over here.
Not cool. Not cool. All right. I will concede. I can see you've got me beat.
Very good game. Well played.
Thank you, sir. Thank you.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
Back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, China Open.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
Welcome back to the Open. 24 minutes into the trading day as we focus on the BOE and its decision later today. A European benchmark is down by 1.3%. Some heavy selling there. A couple of individual stocks in focus when it comes to real estate. None is more consequential in Sweden than SBB, and that landlord is currently being probed by the country's FSA, so regulators there on accounting rules, down almost 10%. Novo Nordisk on a deal you can see currently down by 2%, agreeing to take a stake in a controlling stake in Biocor for about €35 per share, so a deal there for Novo Nordisk, the drug maker. Deutsche Bank, of course, that exclusive interview with Guy Johnson saying that they see a turnaround in trading activity in the second half, but nonetheless, the stock is off by 2.4%. Let's get to what's happening in the crypto space. Bitcoin surging past the $30,000 mark for the first time since April. BlackRock's filing for a crypto ETF last week has injected a shot of optimism. Even Jay Powell talked about crypto yesterday. Let's bring in Anna Herrera, our senior crypto editor then. And Anna, why are big financial firms stepping up and filing at this point? What do they know?
I don't know what they know, but I guess they can see or they've seen that you can make fees out of this. So we can imagine that they've been working on this for a while, right? They don't move quickly. So they probably won't have seen something now and said, let's do it. But, you know, what happened is probably they saw during the previous rally that you could make a lot of money, and they've been thinking about it, and maybe they decided now was the right time. And, you know, we've seen the SEC step in, and perhaps there is more room for regulated players now that the SEC has said, hey, you need to be regulated to do all these things. And these are big regulated firms, so they know the game.
And it's just really interesting in the context of what's going on with Coinbase and the scrutiny there and the action there from the SEC. And BlackRock is obviously a major player in terms of assets. Obviously one of the largest, if not the largest. So them getting involved is huge. What else are you looking for? Is there expectation this can be sustained, just briefly?
It's very hard to tell with crypto because it's a strange beast. You never know why it goes up, and then people come up with reasons. But, you know, if we could see another spike if some other big firm steps in. And as we said, they've been, you know, working at these things for a while, and maybe they see BlackRock come in, they get confidence. Let's announce our big thing too, and then it goes up. But as easily, you could have another enforcement action, and it could crash. So, you know, it's fun.
Currently still holding above 30,000. Anna Herrera, our senior crypto editor. Thank you for the latest there. We're going to bring some live pictures from Paris, where French President Emmanuel Macron is hosting a summit to build support for overhauling the global lending architecture. There you can see the leader of Saudi Arabia. Stay with us. This is Bloomberg.
So as you look back on your career, what would you say is the best investment advice you've ever received?
Probably the best investment advice that I never received, but that I've lived my whole life around, is surround yourself with really good people. I thought about it just today, like I do many times, what makes a great investor? A great investment firm is comprised of people who are optimists and pessimists and realists. Because in the intersection of the debates that go across that wide range of personalities is where you find truth. It's part of the reason I'm so focused on freedom of expression. I see it in my own four walls, the robust and fulsome debates around how we commit our capital, what defines a good idea, what businesses to build or pursue. That's what drives the success at Citadel. And I've been very fortunate in life to have always had a group of friends who really push me, who make me better. And here I get to work with 3,500 colleagues who in their ways make me better each and every day. And collectively, as a team, we've had the opportunity to have an incredible impact on the financial landscape around the world.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Welcome back to the Open. We are 30 minutes into the European trading day, and here are your top stories. Fed Chair Jerome Powell signals rates are heading higher, but at a more moderate pace, telling US lawmakers 2 more hikes this year is a pretty good bet. The BOE weighs a jumbo hike after UK inflation comes in hotter than expected for a 4th month. And Deutsche Bank CEO says he expects trading results to improve in the second half. And revenue for the bank as a whole should be higher in the second quarter. Christian Spjuring spoke exclusively to Bloomberg.
In Q3 and Q4, there is momentum in the business on the fixed side, but for us as a strategy of Deutsche Bank, it is important that we further balance out the investment bank overall.
Here's the redhead when it comes to central banks right now. The Swiss National Bank raising interest rates as expected by 25 basis points from 1.5% to 1.75%. Again, in line with expectations. And you are seeing the Swissy falling about 0.1% versus the euro at 101. Jamie Rush, our economist for Europe, covering Switzerland and the UK. Let's bring him in right now for the reaction to this. Not a big surprise, but the inflation dynamics in Switzerland are quite different.
They are. So, I mean, Switzerland didn't experience the same sort of energy price shock that the rest of Europe had. I mean, partly it helps to have quite a lot of water, hydropower, instead of being entirely reliant on gas, as some countries were. So, I mean, for us, living in the UK, where we've got core inflation at 7%, we think it's easy for us to think, oh, there's no inflation problem in Switzerland. It's at 1.9%. But that's higher than the Swiss National Bank would like. They also have to position themselves relative to the ECB to stop the exchange rate depreciating. So that's partly why we're seeing that they're continuing to hike. And if the ECB hikes again in September, as we expect, then the Swiss National Bank will probably do the same.
And here's the speculation. We had considered whether or not they would leave the door open to additional hikes, the SNB. This is the line. The SNB saying they cannot rule out additional rate rises. They remain willing to be active in the foreign exchange market as well. They see inflation at 2.1% in the first quarter. That's of 2026. 2023 GDP of around 1%. And they see 2023 inflation at 2.2%. The same level in 2024, and then edging down to 2.1% by 2025. For again, the SNB saying they remain willing to be active in the FX markets and not ruling out additional rate rises after that increase of 25 bips to 1.75% for the SNB. Let's get to the BOE then. The debate, of course, markets pricing in what, a 40% chance of 50 basis points. Do you think they go jumbo today to kind of clear the path for a steadier rate trajectory going forward?
I actually don't think that's necessary. If you look at what's happened to market pricing of interest rates over the next year, it's already going to be delivering a huge squeeze without the bank having to add 50 basis points into the mix. I mean, if you look at what's happening to mortgage rates, I mean, if you think, loans are priced based on the expectation of interest rates over the next couple of years, the repricing is enough. It's going to potentially tip the UK into recession if it sticks. So I don't think the bank needs to panic. I don't think they need to do 50 basis points. 25 will be fine. They just keep it data dependent. They're not going to push back on market pricing, I don't think, at this moment. And they can just let that do the work for them.
Okay, not in panic territory yet for the Bank of England. The view there from Jamie Rush, of course, our chief Europe economist for Bloomberg Economics. Jamie, thank you, of course, touching on, of course, giving his take, his analysis on the SNB's decision, and, of course, the preview with the BOE. Yields actually coming off 2 basis points, but still holding above 5% on the 2-year. When it comes to the pound, 1.27, just down 0.1%. Let's cross over to Paris now, though, where world leaders are meeting. Of course, French President Emmanuel Macron is trying to build support for overhauling the global lending architecture. You can see him speaking live there. The summit for a new global financing pact, as it's called, will be a chance to address key issues such as climate change and reforming the Bretton Woods system. Bloomberg's Francine Lacroix is in Paris. Francine, Macron speaking live.
Yes, good morning, Tom. He's just started speaking about 5 minutes ago, talking about this new financial challenge. It is incredible when you look at the communications team of Emmanuel Macron, how he's managed to bring so many people together, world leaders, including the Premier of China. They have not sat in the room with Janet Yellen or any high-ranking U.S. official for many months to talk about these topics. Now, on the agenda, of course, is debt relief, and there's this bigger package about trying to find a new Bretton Woods agreement. So how do you put all of these concerns about poverty, financing, climate change into something that takes into all of these challenges account? So maybe there's also change in how you measure growth and things like that. Now, for the moment, this is the goal. I don't know whether there's anything concrete that people are expecting to happen, but he's hoping that actually they spearhead this to try and get somewhere maybe by COP28. Now, the focus here is, of course, firmly on debt relief. We also had a press conference by Janet Yellen earlier on. And then you have a lot of the island nations to try to figure out how much money they need and how they build out some of the infrastructure. What's impressive is that we have the president of Brazil, we have the president of Nigeria, and also South Africa all here in Paris, Tom.
Well, that's interesting, isn't it? Some of the global south in attendance in Paris. Francis, how much of this is outreach to the global south? How much of this is about France and other Western nations trying to make up lost ground? You talked about the fact that the Chinese Premier Li Qiang is going to be there as well. To what extent is that the focus of this summit?
Well, this is a huge focus. It's a huge win for Macron. I mean, if you speak to political insiders, I mean, this is also a huge win for France. This is Emmanuel Macron. Once again, you saw him, try and broker peace between Russia and Ukraine. That didn't work, but it's him trying to put the G7 country and France really in the middle of some of these big thinking problems that the world needs to address. So it is reaching out to the South in terms of debt relief, as long as we get the money. Again, China holds a huge amount of that debt that they could write off. This was one of the pleas from Janet Yellen that you're seeing there on screen. They're just in the room behind me. But if we don't get any concrete signing of money, of transfers, of infrastructures, we are expecting maybe some of the multinational banks to come up with some kind of agreements and pledges. But if we don't get concrete money, at least it's continuing keeping this on, the conversation in the middle of it. Maybe we'll get something in a couple of months, but they're hard, Tom, if I'm completely honest. I know there's a lot of goodwill from a lot of people, but if you look at the richer nations and some of the nations that need the money most, we're also in a cost of living crisis. Inflation is running high, deficits are high. And so I would say until we get some money with pen and paper, with exactly how much is pledged until what time, it's going to be very difficult to make a real difference that impacts some of the mitigation effects of climate change in some of the countries that need it most.
Yeah, the challenges of translating some of that rhetoric, some of those pledges into concrete action on the ground. Francine Lacroix in Paris for us. You can see MBS there, front stage, as he looks on at the French president. He's back at these summits. Thank you, Francine. We have lots more, of course, from the French capital, including an interview with the French Finance Minister Bruno Le Maire joining us exclusively from the summit for a new financial pact, as it's being called. Coming up, as the Ukraine Recovery Conference continues, another important summit, focus remains on the strategic partnership between the US and the EU. We're going to speak with the US ambassador to the European Union. That is an exclusive interview. That is next. This is Bloomberg.
Is as safe as it was when you were in the government?
It's not as safe as it was. Crime is clearly rising. I mean, it's not back to the dark old days of, pre-Giuliani in the early 90s. But we got to be careful because safety is the foundation of everything. And so I know the current mayor is committed to reducing crime. But we're going to have to be incredibly aggressive in making sure that crime does not increase.
Are you involved any longer in New York City matters, or your advisor?
Yeah, the mayor and governor actually asked me to co-chair a panel or a task force on reviving the commercial districts throughout the city. So I've been in the middle of that.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Welcome back to the Open. 41 minutes into the European trading day. Losses continue. A fourth straight day of selling across European equities. Across the benchmark, down 1.2%. Heavy selling over in Italy, down 1.8%. Banks are being crushed, down 2.4% as a sector. Let's get to what's happening with Ukraine then. The recovery conference continuing here in London with allies from the US, UK and EU pledging long-term support for that war-torn country to focus on the strategic partnership between the US and the EU. Let's go to Brussels, where our European correspondent Maria Tadeo is standing by with a very important guest. Maria.
Yes, he is, because he is the U.S. ambassador to the European Union, Mark Ettenstein. Thank you so much for being with us. And look, on this show, this is full disclaimer. We spent so much time debating about the relationships between the United States and the European Union. Well, you're the ambassador. How do you see it?
Well, I have the privilege of serving as U.S. ambassador to the EU at probably the high point in the last half century on the relationship between the EU and the United States. And I think there are probably three reasons for that. One, President Biden ran for election on the platform of rebuilding this relationship and all multilateral relationships, but in particular the transatlantic relationship. Number two, it does make a difference that we have a common enemy. We have Russia threatening the very existence of the transatlantic relationship, both in NATO and the EU. And third, I think it's the statecraft that's been demonstrated by the leaders on both sides of the Atlantic, not only by President Biden, but also by Presidents von der Leyen and Michel, who have worked very closely with President Biden on the EU relationship. President Metsola deserves credit as well. And then at the next level, Joseph Borrell and Tony Blinken and myself have a very good relationship. And at the staff levels of all of these offices, we're in constant touch with each other, and I think that we're like all on the same team.
And Mr. Ambassador, that was not always the case. I remember at a point when President Trump was, of course, President of the United States, the relationship, let's be very clear, broke down at one point. There was very little communication. You say now it's working, but there's an election next year, so what's going to happen? It can go both ways.
Well, President Biden's going to win re-election for now.
Oh, he will win the election?
Yes, you heard it here first.
So you say don't worry, he's getting reelected.
I'm confident that he will be reelected. Regardless, we are building institutional relationships and making commitments that will hold us in good stead for the next 50 years. And I think we're also in the process of building a new security structure, much like what happened in the Truman administration, 80 years ago. And it's being driven by events. And I think on both sides of the Atlantic, there is an understanding and a commitment to a new revitalized relationship.
And you talk about economic security, and that takes me, of course, and you know this, to China. You talk about de-risk. The European Commission 2 days ago, von der Leyen repeated this idea of de-risk. Do you feel the Europeans have moved closer to your assessment, or actually this is a convergence of views?
I think the best thing to read, the best things to read about this would be probably Jake Sullivan's speech at Brookings, where he goes through, sort of a new economic strategy. I think the paper that the Commission just released on economic security, this 14-page paper, which is a starting point in the debate in the Commission and the European Union, describes de-risking very eloquently.
Which is
to recognize that secure supply chains and export controls and protecting national security is as important as trade, and that you have to build structures on both sides of the Atlantic that are capable of protecting both. And I think we have spent hours discussing this between both sides, but in the end it's a sovereign decision by the United States and by the European Union as to how to handle it. I think that paper is a very good beginning. This was done by the European Commission. I only saw it after it was released, but I was pleased with what I saw.
And that is your message. You say you're pleased by what you saw, but I also want to bring up the elephant in the room. Some do say at times in Europe, and you know this very well being in Brussels, that yes, it is clear that China is not a Western democratic country. That is clear for everyone in Europe to see. But at the same time, some would argue the United States can be confrontational too, and they don't want to be dragged into this. Is there a misconception in terms of what you're trying to do here? Is there a message for Europeans that you want to send?
Europeans and Americans want to build an economy that serves the broader purposes of climate change and the other existential threats, whether they come from Russia or China or wherever, that also serves workers on both sides of the Atlantic, including a new industrial policy. And I think that's what you see happening.
And the industrial policy, you of course have the Inflation Reduction Act. The head of the Commission said she wants to create what is promoting and protecting made in Europe. You want to protect made in America. She wants to do made in Europe. How is that compatible?
Well, because we both face the same threat.
You don't believe there could be trade tensions again?
There are trade tensions, but that's natural between two democratic systems, and we have to bring them to the same page, and that's primarily what I do for a living, is I try and build consensus on both sides of the Atlantic on these very issues. And as somebody asked me what my job was, and I said, it's keep bad things from happening. And one of the bad things is if we have a misunderstanding. There's no reason for a misunderstanding because our ultimate goals are the same.
And can I ask you, when it comes to von der Leyen in particular, some say she is the most U.S. compatible EU official. I'm not sure what U.S. compatible means, but in your view, is she the most compatible person for you? Is this the person that you pick up the phone and you say, let's talk to her?
I don't look at it that way. She is the sovereign head of a sovereign entity, and my job is to relate to her and be sure that she and President Biden have a good relationship, just as he has with President Michel. And I sat on March 10th in a 4-hour meeting with the two of them, and I was stunned at how well they got along. They are They communicate very well to each other. They have different interests because they represent different systems, but they are able to reach common ground pretty easily. Same is true with President Michel. And the same is true between High Representative Borrell and the Secretary of State.
And
I've been in all those meetings, and it's amazing how much their common goals are the same.
And that's reflected very much again in the tone. It is palpable. Things have really changed for the better with this administration. You can not concede that.
Yeah,
but
that's true. But part of it is that you have very talented leaders who listen to each other.
So then that takes me to my final question. If you believe President Biden will win the election, he'll be reelected, will you be happy if Madame von der Leyen gets a new term at the commission?
We have a great relationship with.
So you want to see that?
We have a great relationship. I'm not going to get into the middle of who they should select as their president, but you know, continuity would be good in terms of the relationship. But you know, this is a decision for the Europeans to make, not us.
Well, Mr. Ambassador, thank you so much. By the way, is your life anything like the show on Netflix? Not in the UK, but in Brussels. How does that work? Is there a European spin on it?
I'm glad it's not, by the way. It's not, no. I don't fly around in a private plane. I don't have anybody selecting my suits in the morning.
You've done it for yourself.
Yeah, I do that for myself. That should be obvious.
Well, Ambassador, thank you so much. We appreciate your time, and hopefully we get to hear more from you here on Bloomberg TV in this very important hours in European programming.
You invite me back, and I'll come.
Well, thank you very much. Appreciate it.
All right, thanks.
And Tom, that was Mark Gettenstein. He is the U.S. ambassador to the European Union. And look, sometimes life, they say, is better than fiction, but his life is not a Netflix show. He's made that clear.
He's watched the show. He's watched the show. There we go. There's the headline. He's watched the show. Maria Tadeo, brilliant. Thank you very much indeed. You got him as well on VDL, I think. He said continuity would be important. Of course, he doesn't want to be suggesting selections, but he made it clear continuity would be helpful for that relationship. Bloomberg's Maria Tadeo with a great interview there, of course, with the US ambassador to the European Union, Maria, in Brussels. Let's check in on these markets. It's a less rosy picture when it comes to these equity markets. A fourth straight day of selling as investors wrestle with the fact that these central banks are continuing to hike. Jay Powell, of course, sending US stocks lower in the session yesterday with his comments suggesting that the door remains open for 2 more hikes. The SNB in Switzerland hiking by 25 basis points as expected. And the Bank of England, the conundrum there later today for NBC members, it's likely to be a very split decision. 25 basis points is the expectation, but we cannot rule out 50 basis points given core inflation here has ticked up once again above 7%. Across the benchmark then, selling down 1.3%, a fourth straight day of losses, as I said, across these European stocks. The DAX down 167 points at 15,846, and the FTSE 100 is back below 7,500, a drop there of 99 points, down 1.3%. Across your sectors, the heaviest selling coming through for the banking space, down 2.4%. Autos also taking a knock of 2%. Gilts, not a lot of action in the session so far today, and the pound is at 127 flat. That could, of course, all change depending on how things play out with the Bank of England. The sector that is performing least badly is food and beverage, just down 0.4%, followed by telecoms down by 0.5%. Coming up, Volkswagen, their technology head, saying the automaker's EV push around batteries is proving to be one of the company's biggest challenges. We bring you that interview. It is next. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He's a day trader. He taught himself, self-made day trader.
Yes.
And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
You know, in many ways, it's convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
DOJ or other authorities
could face bigger challenges next.
was going to keep Green World Cup. This is a 3.
As the economic picture does.
The BOK is getting ready to make a decision.
Totally different, keeps us awake at night. It's, I think, one of the biggest challenges we as automotive car guys will face. And it's only possible because we are looking for a perfect team, have even some experience to do that in technology-wise, ramping up factories of batteries. As you know, we are a little bit behind of existing players, so we need to catch it up.
And in terms of being behind, you know, one of the challenges I think a lot of the people who are a little bit further ahead, let's say, you know, Tesla or Northvolt, they've had issues with scale, of reaching the scale. You know, Volkswagen really masters of scale. What can you do to avoid some of the problems that your competitors have faced?
Yeah, it's scale and complexity. Scaling up, I think we can match that at Volkswagen. We do it since years worldwide. The advantage of PowerCo as our own battery company is that they have the whole firepower of a big group as Volkswagen to cover them in the back and to have the agility in an own legal entity to go fast. So it's a mixture between a startup and the firepower of a complex company. And then the technology roadmap is really important because with our technology roadmap we decrease complexity, was what gives us speed.
And in terms of those bottlenecks, is it labor, is it machinery, is it the raw materials? Talk to me a little bit about kind of more nitty-gritty what you're encountering. What are the things you need to smooth out to really get
there? How much time you have, because it's more or less everything is a challenge in that business.
Yeah.
It's not only a battery factory, it starts with people. There's a handful around worldwide which will be available with knowledge about battery business. That means people is a challenge. Equipment to ramp up factories is a challenge. Critical minerals is a challenge. So this business is a challenge.
Okay, that was Volkswagen's technology head speaking to Bloomberg's Oliver Crook. That is it for the European market open. It's been another rough session, at least so far. European equities down a full 1.1%. US futures pointing lower by 0.3% on the S&P E-minis. The Bank of England is the central bank to watch next after the comments from Jay Powell and the Swiss National Bank's decision to raise rates by 25 basis points, though they did downgrade their forecasts around inflation. The Bank of England, though, what a conundrum. 25 or 50 is the question, and the guidance, if there is any, on future rates. Stay with us. Surveillance Early Edition is up next. This is Bloomberg.
Young adults are facing some tough challenges. Higher living and education costs and wages that aren't keeping up with inflation are making it harder for them to support themselves. And they're relying more on the bank of mom and dad. A new bank rate report shows nearly 70% of parents with kids 18 and older are putting their own finances in danger to help them. About half are dipping into their emergency savings or delaying paying off debt, while 43% drain their retirement funds. So where do you draw the line? There seems to be a generational gap, as older parents can't understand why being self-sufficient now is a lot harder than it was for them. Gen Z seems to think on average that 22 is a benchmark for covering the expenses, while baby boomers say their adult children should pay their own way closer to age 20. Either way, it's a family decision. Bankrate suggests having a conversation with your kids and setting a specific dollar amount or time frame for footing the bill.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays. This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month. This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to a special edition, a special show of Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Paris for President Macron's summit on a new global financing pact. And the aim, of course, is to try and change the way that multilateral institutions work to better support poorer nations and address threats like climate change and pandemics. Now, over the next hour, we'll hear from some of the leaders who are attending the summit. Here's what else is coming up on today's program. Of course, it's BOE Day. Happy Thursday. It weighs a jumbo hike after UK inflation comes in hotter than expected for a fourth month. Fed Chair Jay Powell signals rates are heading higher, but at a more moderate pace, telling U.S. lawmakers 2 more hikes this year is a pretty good bet. And we talk banking with the Deutsche Bank chief executive. He tells our Guy Johnson he expects trading results to improve in the second half as clients navigate a complex and challenging economy.
In Q3 and Q4, there is momentum in the business on the fixed side, but for us as a strategy of Deutsche Bank, it is important that we further balance out the investment bank overall.
Now, let's check on the markets. The focus firmly on what we heard from Jay Powell yesterday, and of course, ahead of the Bank of England, will we see more rate rises? Stocks slumping, U.S. equity futures also down. Again, quite a lot of central bank decisions. UK, Norway, just coming out now, seeing the key rate at 3.88 in the third quarter of 2023. And then we also had earlier on Switzerland and some of the other things that we were watching out for today. Now, banks, real estate, miners, actually the biggest losers in today's trading session. Investors really rethinking some of the bullish spirits unleashed by last week's Fed rate pause after Powell yesterday underscored the need to tame inflation during his semi-annual report to Congress. Now, a big day, as we were saying, for central banks. That's after Jay Powell made those comments yesterday. Let's bring our markets reporter, Valerie Teitel. Valerie, last week, there was kind of like a sigh of relief saying maybe central banks are pausing. Today, not so.
Today, not so much. We just got the decision from the Norges Bank, and it is a jumbo 50 basis point rate rise from them. Not only did they beat expectations on the size of their hike, but they are upgrading their guidance, saying rates will most likely be raised further in August. They also raised their expectations of the peak rate to 4.2%. Their last projection was 3.6, so over 50 basis points
increase when it comes to their guidance for the peak rate. We're just watching the FX markets here. Euro NOK, you're seeing the Norwegian krona strengthening over 1% versus the euro. Now, this goes back to the decision from Switzerland just 30 minutes ago. They did not choose to go for a 50 basis point rate rise, but kept on to 25 basis points. That is the smallest hike from Switzerland this year. But they also said, very much like the Norges Bank, that they can't rule out additional rate rises when they meet again in September.
Yeah, and of course, the big one, thank you so much, Valerie Teitel, is the BOE. As we heard, the rate hike is all but certain when the Bank of England meets today. In fact, there's been some repricing since we had that inflation figure yesterday. A major, of course, headache for the central bank, getting that inflation higher than expected yesterday, adding to pressure on the country's already squeezed household. So for a full rundown and actually what to expect on decision day, let's bring in Lizzie Burden, our UK correspondent. Lizzie, it's a headache. If you're at the Bank of England today, if you're an NPC member, I mean, what do you vote for? What are the chances of a half-a-point BOE hike today?
Well, Francine, markets are pricing a 40% chance of a half-point jumbo hike, but economists reckon it'll be 25 basis points. The reason for this decision split is because, of course, we had that fourth upside inflation surprise yesterday. So, as you say, it's a difficult moment for the Bank of England, but economists reckon the 50 is going to come in August. By then, you'll have a press conference, you'll have the forecasts. That should make it more easy to communicate why they're going back to acting forcefully. Also, by then, Silvana Tenreiro, big dove on the committee, will have been replaced by Megan Green, and she's been making hawkish noises recently. So as for today, some economists reckon you're going to get a three-way vote split between the doves like Tenreiro and Swati Dhingra, emphasising that the previous 12 hikes still have to filter through to the economy, going for a hold. On the other hawkish end, so Catherine Mann, Jonathan Haskell going for 50, and the rest in the middle going for 25. But really, the question today is also about the future path for rates ahead. Markets pricing a peak rate of 6% by December. Some traders seeing 6.25%. Bloomberg Economics says that 6% would trigger a recession in the UK. Will the Bank of England Governor Andrew Bailey push back against market expectations? It often seems that the bank thinks it's above doing that, but it made an exception in November. Will it do it again? Will the markets take the message? If not, looks like credibility could be in the spotlight again.
Yeah, and of course, Lizzie, look, if you're sitting in Westminster, if you're an MP, you're worried that if mortgage rates go high, you're going to lose your seat.
Exactly right, and we're not far off a general election. It's very much on the horizon. There's pressure for the government to step in because the precedent's been set. It was very interventionistic in the pandemic, for example, with furlough, and so the expectation is there that they will do something again. There are worries on the Tory backbenches that, as you say, they'll be punished in the polls if they don't step in, and there's been a suggestion from former Shadow Chancellor John McDonnell that there should be a windfall tax on banks to pay for this extra mortgage support. Well, the answer from the Chancellor, Jeremy Hunt, so far has been that he's going to do nothing that will counter the Bank of England's inflation-fighting mission. We'll see what he agrees when he meets the banks on Friday in terms of other measures to ease the pain.
Lizzie, thanks so much. Lizzie Burden, they're our UK correspondent. Now, coming up, we'll have plenty more, of course, on the UK, on the Bank of England. We have a great chart looking at bonds worldwide. Plus, the Ukraine Recovery Conference continues, and the EU has already pledged some €50 billion aid package. We'll be speaking exclusively with the Executive Vice President of Economy and Trade for the European Commission. Don't miss that exclusive conversation. That's next, and this is Bloomberg.
Tag on the product may read Made in the USA, but the sign on the CEO's door often says Made in India. Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
This is Bloomberg.
Our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television, your global business authority.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Paris for the Macron Summit. Now, the Ukraine Recovery Conference also continues in London, with, of course, allies from the US, the UK, and the EU pledging long-term support for the war-torn country. Well, let's go straight to our Bloomberg, Danny Berger, who is in London with one of the most important voices inside the Commission. Danny, over to you.
That's right, Francine. Thank you so much. And yes, the EU, they've already proposed a €50 billion aid package to support Ukraine as the country embarks on a critical counteroffensive. And as you say, I'm here with one of the most important voices on this. It's Valdis Dombrovskis, Executive Vice President of Economy and Trade for the European Commission, who joins us today for an exclusive conversation. Mr. Dombrovskis, thank you so much for joining.
Good morning.
So on this proposal, what's the reception been so far from member states?
Indeed. So European Commission put forward a proposal of 50 billion support package for Ukraine, consisting of both grants and loans, and it covers a period of 2024 to 2027. It must, of course, we'll have to discuss the specific package, but broadly speaking, there is support for Ukraine. EU member states have pledged on a number of occasions their willingness to support Ukraine for as long as it's necessary, and making sure that Ukraine is able to defend itself and win this war against Russian aggression.
So you have broad support for this then. Do you expect support for this package then in its current form from the member states?
Well, yes, indeed, we would expect the support for the package. Of course, there's going to be discussion with member states. It may bring some adjustments, but generally speaking, it's clear that this year we were focusing on how to ensure financing need for Ukraine for this year, and this is done. So financing need for this year is covered. Actually, today, EU is paying another €1.5 billion to Ukraine as part of our macro-financial assistance program. And now we are looking more at the medium-term focus. That's where this 50 billion package comes in, where on one hand we still need to finance, to cover the financing need of Ukraine, but we also need to start working on reconstruction, combining investments with reforms which are needed also for Ukraine's EU integration.
Right. And so the figure of this package of 50 billion, spread out over the 4 years, it is less than has been contributed to Ukraine over the past year. So annually, the figure does look a little bit lower. How did you get to that specifically? Do you think it will need to ultimately be higher?
First of all, of course, we expect now also other donors coming with more medium-term plan. Actually, EU is first to come with a sizable medium-term package for Ukraine. And on one hand, we expect support also from other donors. On the other hand, we also need to work on the absorption capacity and capacity to use this money in Ukraine, how quickly it can be deployed, because on one hand, reconstruction need is huge, but on the other hand, there are obviously capacity limits on how much simultaneously can be reconstructed.
And on the topic of using the money, what steps need to be taken to make sure that it's not misused, to tackle any concerns about corruption?
First of all, Ukraine would need to prepare medium-term Ukraine reconstruction plan. After approval of this plan, the money would be available for Ukraine as it advances with implementation of the plan. And clearly, we are also proposing a strong audit and control system to make sure that this money indeed is put for a good use.
And it's interesting because part of what you've done here is you really do strengthen the financial links between member states of the EU and Ukraine. Will this help Ukraine's process in joining the EU?
Well, certainly, as I was saying, we see also this financial package linked with Ukraine's accession path. So Ukraine would need to clearly do lots of investments, but also implement reforms which are linked to the EU accession.
And how do you see that process going? Where do we stand on it currently?
Well, currently, just now, European Commission provided so-called oral update on how Ukraine is proceeding with implementation of conditions which were set when Ukraine was granted EU candidate country status. All in all, progress is good, and there is substantial effort which Ukrainian government is putting into this despite very difficult war situation. But then we are going to have a report, enlargement reports for all EU candidate countries in October. And I would say that's the moment when we really discuss the next steps for Ukraine's EU integration.
So it's certainly been a busy week. The EU also proposed a new economic security strategy earlier this week, too, on things like controlling outbound investment and exports. Do you expect pushback from member states?
First of all, as regards export controls, we already have export controls regulation in place concerning notably dual-use items, and this outbound investment is, in a sense, linked with this. So if there are export controls to make sure that sensitive goods, dual-use goods, do not end up in hands of malign actors, we also need to look whether the same is not achieved then through investing in those countries and transferring technology, know-how, and so on. So it's closely linked. But clearly, this will require further discussions with member states. So that's why we propose that we are setting up an expert group together with member states to work on these issues.
So does that mean there has been pushback then?
I think we require more discussion, because this is a new area, as I was saying, in terms of export controls. It's also relatively new EU-level regulation, which we are currently applying. On outbound investment, currently we do not have any mechanism in place. So this requires discussions, and we are going to have those discussions with member states, with different stakeholders, including business community, with a view of then coming with an initiative by the end of the year.
What do you say to Chinese officials then who say, look, if they're speaking specifically about Germany when they said this, but in terms of de-risking and trying to move away from China, it should be left up to businesses, not government. What do you say to that?
First of all, when we are proposing any initiative or any legislation, we do it in a country-agnostic way. So it's not specifically referring to one or another country. And second, what we are going to put forward also is with respect of international rules-based framework, for example, our WTO obligations. But at the same time, it's clear that in the EU we should continue to build on our strengths of being open economy, of being a trading superpower, but at the same time there are certain economic security concerns which we need to address in a more conflictual global geopolitical environment.
Well, we've seen certain measures like that from the US invoke the ire of China. Are you concerned that this might end up doing the same?
As I was mentioning, that when we are going to prepare proposals, we are going to do this in a way that respects international rules.
Okay. Valdis, thank you so much for joining today, stopping by during the Ukrainian Reconstruction Conference. That is Valdis Dombrovskis, Executive Vice President of Economy and Trade for the European Commission, in what is a very crucial time for the European Union. And we're also going to be speaking to the Ukrainian Prime Minister from the Ukraine Recovery Conference in London. That will be at 1:30 p.m. local time. But first, coming up on the show, Christian Saving says Deutsche Bank's business strategy is paying off. We're going to have that exclusive interview next. This is Bloomberg.
DHL is sending a consistent message with its investments. The company spent 123 million euros to upgrade its logistics centre at the Cologne Bonn airport, designing it around key strategic goals.
What I love about this building is it actually shows the big mega trends which formed our strategy 2025, which was inaugurated in 2019 when this building opened. So globalization, connecting the world. E-commerce, we have a lot of sortation facilities here for smaller e-commerce shipments. Sustainability, it's a very sustainable building with solar panels on the roof and everything. And digitalization, and well, you can obviously see that it is quite automated.
How did the team pitch this investment to you initially, and how hard was it as a sell for them? How quickly did you turn around and say, yes, this is worth 123 million euros?
Of course, you always have to make sure that you have the right capacity for the growth in the network. And at that time, they came and said, hey, we will really see a strong growth in e-commerce volumes on top of the regular B2B growth. We need more sorting capacity. We need this building. And of course, there are always debates. Does it really have to cost 123 million euros and so on? But fortunately, they convinced us, because then with COVID and the volume surge, we urgently needed the capacity.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready? Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanivek bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg. From the world of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
We have a very strong corporate bank, a very nice developing private bank, and therefore we can confirm our 28 to 29 billion of revenues for this year. We see the momentum. We see a Q2, to be honest, Q2 2023 from a revenue point of view, which is higher than Q2 2022. So overall, I would say this bank is faring well. The strategy is paying off. With regard to the investment bank, we always said that we had a record year. We had an extraordinary strong year in the FIC business in 2022. I still think that actually in Q1 and Q2 we have done well, but the overall market is a bit weaker than in the record year of 2022. But I do believe with some uncertainties, for instance, the debt ceiling issue going away in the US, then with the still complex situation which is in front of us, I do believe that in Q3 and Q4, there is momentum in the business on the fixed side. But for us as a strategy of Deutsche Bank, it is important that we further balance out the investment bank overall. We have a very strong FIC business. We have a very strong DCM business. What we really wanted to achieve is that also the O&A business is further strengthened. And hence, we've put a lot of investments into that.
So just to wrap this part of the conversation up, it's going to be an operating environment for the FIC business that is likely to be less good than last year. Q2 may or may not be a blip. You still see uncertainty in the second half of the year, which could provide opportunity. So on balance, the numbers are likely to be slightly better than the 15 to 20% that James guided to.
That's what I would say for the coming months and weeks. Again, Q2 was also a particular quarter, given the situation also which we had in the US. We can already see also now in June, on the most recent days, that there is momentum in the business. So I'm overall actually quite comfortable also with the FIC business. And again, Q2 was a particular quarter. I would say that the FIC business in Q3 and Q4, I think there was a slight recovery.
Well, that was the Deutsche Bank Chief Executive Officer, Christian Sewing, speaking exclusively to our very own Guy Johnson. Now, we've had a lot of central bank news, of course, the big one coming up at 12 p.m. UK time. That's the Bank of England. For the moment, let's look at Norwegian krona. I don't know whether we have that on screen for you, but certainly the krona was surging against the euro after the Norges Bank, the Norwegian central bank, actually raised its benchmark rate by 50 basis points and flagged another increase in August. Now, the Monetary Policy and Financial Stability Committee for Norway decided to raise the policy rate by 0.5 percentage points. They're basically saying that the current assessment of the outlook and balance of risks implies that the policy rate will most likely raise further in August. So we are seeing, after also we heard from Jay Powell yesterday, that the fight of inflation needs to continue. We are seeing more aggressive moves from central banks. We'll see what we hear from the Bank of England. That's at 12 p.m. UK time. Now, Bitcoin has jumped for more than 20% back above the 30,000 level since BlackRock's surprise filing for a Bitcoin ETF last week. The move has sparked a flurry of similar applications from rival issuers. And of course, we also look at what's happening with the Titanic and search efforts there. Not the Titanic, but of course the submarine, the submergible that was going to see the wreckage of the Titanic. Coming up, we'll be speaking with Pascal Canfin, the EU Parliament Chair for the Environment, Public Health and Food Safety Committee. And then a little bit later on, an exclusive conversation with the French Finance Minister, Bruno Le Maire. He joins us here at the summit for a new financial pact. Hello from Paris.
Okay, so you're moving in on me, quick, distracting me with your fancy hands. I'm going to deal with your knight because it's really bothering me.
Ah, my knights.
Yeah, he's a troublemaker.
Yeah.
What did you get up to this weekend?
You know, just robot stuff. A lot of chess. I was practicing for you. I know you're pretty good. Ooh, I don't like that. I will take this. Put it over here.
Not cool. Not cool. All right. I will concede. I can see. You've got me beat.
Very good game. Well played.
Thank you, sir. Thank you.
Bloomberg UK, your your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Is as safe as it was when you were in the government?
It's not as safe as it was. Crime is clearly rising. I mean, it's not back to the dark old days of, pre-Giuliani in the early 90s. But we got to be careful because safety is the foundation of everything. And so I know the current mayor is committed to reducing crime. But we're going to have to be incredibly aggressive in making sure that crime does not increase.
Are you involved any longer in New York City matters, or your advisor?
Yeah, the mayor and governor actually asked me to co-chair a panel or a task force on reviving the commercial districts throughout the city. So I've been in the middle of that.
Now, the BOE weighs a jumbo hike after UK inflation comes in hotter than expected for a fourth month. The Fed Chair Jay Powell signals rates are heading higher, but at a more moderate pace, tell U.S. lawmakers 2 more hikes this year is a pretty good bet. And then the Deutsche Bank chief executive tells us exclusively that he expects trading results to improve in the second half as clients navigate a complex and challenging economy. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in Paris. Now, you just saw and heard, maybe not saw, but heard a huge clap as we saw President Macron about an hour ago get on stage, and then he's followed by a lot of, pledges from a lot of climate leaders and heads of state. So the concern is that you're not going to get anything concrete here, so that there's an agreement of talking more. Climate change solutions, of course, the focus here, the Summit for a New Global Financing Pact. French President Emmanuel Macron attempting to build support, basically, for overhauling the global lending architecture. So I'm very pleased to be joined by Pascal Canfin. He's the chair of the Environment, Public Health and Food Safety Committee at the EU Parliament. So, Mr. Canfin, thank you so much for joining us. There's a lot going on. So people have to understand that there's like 30 heads of state in a rather small, confined space. And there's a lot of excitement at who's here and who's not here. What are you hoping to achieve in the summit?
Well, first, we need to rebuild trust. I mean, the key element of solidarity is trust. I mean, if we don't trust each other, the system will be broken for sure. So one example is the money we committed to share at Copenhagen. It was in 2009, and we failed to do it so far. The good news is that it was announced a few minutes ago. We are now very likely, de facto, we are now for 2023 at 100 billion on climate. It's by far not enough, but symbolically, politically, it was needed to get there.
I mean, how will you measure success of the summit? It's like, you walk around, and again, there's very few media that have been invited here, so we're lucky to be part of this. You see the Saudi Crown Prince. We spoke to the Saudi economy minister who's just walking along the corridor. You have the president of Brazil. You have so many people that can make a difference. Yeah. I mean, is it signing, or is it, again, talking about trying to get somewhere?
Is it redesigning? I mean, we know that in the context of China and the US being on more and more conflictual line, on having more and more climate impact, and the failure of the COPs to deliver on enough climate action. All of that is destroying trust. So we need to use both formal and informal fora like this one to recreate the connections and to redesign the system to be able to be at scale, both for climate and for development. And that's also what President Macron said at the very beginning. If we start opposing climate action on one side and fight against poverty and for development on the other, we will collectively, for sure, fail. So that's why we need to design new tools like guarantees, way to have more injection of private capital and so on. That's the core of the agenda.
But some of the old tools are actually not working. If you look at the EU Green Deal, right, it's faced so much pushback from constituencies, from countries, for example, on everything from renewables to nature restoration. So how severe, first of all, are these challenges, and do you think they'll be overcome?
Yeah, so that's the problem when we turn into climate action into reality, that it starts having impact, and then you have opponents saying, well, what is going on? I do not want this. So we are changing the business models here in Europe. And it has impact, positive impact, but also negative impact for some businesses, and they are pushing back. They are pushing back. That's why.
Do you worry about these challenges?
So I'm not worried, but I can tell you that every day we work very hard to counter this backlash that is coming from a sort of European Trumpism, which is new, and which is an alliance between part of the right-wing parties and part of the extreme right-wing parties on a line that is well known in the US. And that's coming to Europe now, and we are to make sure that we win this political, this cultural battle we are in, to continue proceeding on the Green Deal and climate action.
What would you do now to also make sure that if you look at green tech, clean tech, it doesn't go to China, it doesn't go to the US because of the Inflation Reduction Act, it comes and stays in Europe?
So the good news is that last year will remain as the year when the competition for green tech and clean tech really started at scale for real. China, Japan, Korea, EU, US. In the US, you have IRA. In China, you have domestic policies. And in the EU, you have the Green Deal and everything what we have been doing. And this is good news because the only way to win the climate battle is to have productivity gains, to have decreasing cost of production, and being producing at scale. So that's good news. Then it's up to us to be part of the winners and not of the losers. But then we have domestic EU policies, public support. We change the framework for state aid regime, for instance.
No one wants to be a loser. You just have to put the policies in place that attract the money.
When you look at the US IRA, when you look at the concrete figures and the concrete sectors that are concerned, the vast majority is for the US domestic market. Energy production, US domestic market. CCUS, US domestic market. EVs, of course, which is good. It's good. I mean, it's good that we have including European companies producing in the US for the domestic US market. But it will not prevent them to produce domestic EU for the EU market.
But what about the development?
So I'm not that worried about that.
I am, because if you look at the cost, for example, of producing hydrogen, green hydrogen in the US is going to go so much cheaper. Why would you not bring that technology to the US instead of developing it in Europe?
Hydrogen is one of the very few counter-examples of what I said. But the vast majority of IRA money is for the domestic US market. And then part of it, a small part, is for exports, or also domestic US market for green hydrogen, but also for exports. But then if, for us, it means that we could get part of our green hydrogen cheaper because there is a good, sound US policy making it cheaper, what's the problem at the end? What's the problem? Of course, if we entirely rely on this, that will make a problem for us in terms of dependency. But if it is part of it, what's the problem?
How much money do you think private and public partnerships can put together? I mean, at the end of the day, it's all about the finance, right? And we've taken a step forward and sometimes a step back. How much money does Europe need?
It's very complicated to say, to be honest. Why? Because at the EU, you know that by heart, there are member states plus the EU level. So you cannot compare, and it's a mistake that shouldn't be done. You cannot compare the US federal money with the budget in Washington and DC and the EU Brussels-based budget, because as you know, the total budget of the EU is 1% of the total EU GDP, when the total federal budget in DC is around 20% of the US GDP. So you cannot compare both. But if you took everything on board, plus the regulations that drive, incentivize private investments, I don't think that we are lagging behind. And if I take the French case, I met a couple of days the ministers in charge of this, and he told me there is not a single project that was about to be invested in France that is not invested anymore because of IRA. Because actually what the companies are doing is precisely to locate investments in the US, mainly for the US market and for the EU market domestically in the EU.
Are governments less likely to put money behind this because there's a huge cost of living crisis, inflation is a real problem, and so central bank interest rates are also changing?
When we talk about inflation, what kind of inflation are we mainly talking about? We are talking about fossil-flation, inflation coming from a fossil crisis energy. So it came from Russia, and then it spread all over the value chain, I would say. But it is the main driver behind what we see as inflation last year is the fossil fuel crisis from, obviously, the invasion of Ukraine by Russia. Then there is another risk, which is what we call greenflation, meaning that the cost related to transition. But it is more medium term, because what we are facing now, it's not at all greenflation, it's fossilflation. So let's just get back to reality and then fighting this fossilflation. And the best way to fight this fossilflation is precisely to be less dependent on fossil fuel.
Pascal Canfin, thank you so much for joining us today. He is, of course, the chairman of the Environment, Public Health and Food Safety Committee at the EU Parliament. There, a robust conversation also about the Inflation Reduction Act. Now, coming up ahead, we'll be speaking to Angola's Finance Minister, Very Davies de Souza, live from Paris about the economic outlook for one of Africa's biggest oil exporters. And then a little bit later on, we also speak to the French Finance Minister, Bruno Le Maire. Stay with us, and this is Bloomberg.
Adults are facing some tough challenges. Higher living and education costs and wages that aren't keeping up with inflation are making it harder for them to support themselves. And they're relying more on the bank of mom and dad. A new Bankrate report shows nearly 70% of parents with kids 18 and older are putting their own finances in danger to help them. About half are dipping into their emergency savings or delaying paying off debt, while 43% drain their retirement funds. So where do you draw the line? There seems to be a generational gap, as older parents can't understand why being self-sufficient now is a lot harder than it was for them. Gen Z seems to think on average that 22 is a benchmark for covering the expenses, while baby boomers say their adult children should pay their own way closer to age 20. Either way, it's a family decision. Bankrate suggests having a conversation with your kids and setting a specific dollar amount or time frame for footing the bill.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
There is a need to increase the investment clean energy in the emerging world, in Asia, Latin America, and Africa. And it is the reason we came here with a plan to President Macron and the other leaders, how we can accelerate the clean energy investment in developing countries.
Well, that was Fatih Birol, Executive Director of the IAA, of the investment needs for clean energy in emerging markets. I was caught off guard there because I was actually checking the price of oil and seeing some of the dynamics. We're here live in Paris at Macron's summit for refinancing. I am delighted also to be joined by Vera Davies de Souza, the Finance Minister of Angola. Minister, thank you for joining us. There's a lot to talk about. It's oil subsidies. Of course, this is a huge summit that would make an impact on Angola. Are you seeing the right signs from here about transitioning and getting enough support from some of the countries that need to transfer funds?
Yes, for sure. I think the political will is there. The commitment is there. Now what we need to see is the actions, the pragmatic actions for us to address.
Will we get action? Are you confident that we'll get money, we'll get things signed, or is it just talk?
I'm very positive. I'm a positive person, and I will put a lot of faith on that and keep working and putting pressure on the right institutions, on the right people. President Macron is also in the same mood of putting pressure, and we expect, based on that, we will see some actions coming.
Who do you think is leading? So we also have the Prime Minister of China. This was a huge deal, right, for Emmanuel Macron to try and get him here. Can China play a defining role and a big difference?
I think we need to look at it as like a whole effort. It's not possible to rely only at 1, 2, or 3 partners. We need to come together. And only coming together is possible to address a challenge such big as climate change, the debt distress, needs on liquidity, and also development. All this together, it's a hard task. And so we need to move together to address it.
Minister, when you look at some of the measures put in place to decrease poverty in your country, what will work the best, and what does that mean for future growth in terms of GDP this year and next?
We are acting in the short term and with some structural movements. Short term, we are putting in place some mitigation measures with World Bank support, cash transfer program. We are moving an employment fund. We are establishing one that will start the basis to address the capacity building and to build on the entrepreneurship of our youth, and at the same time reducing some subsidies that need to be reduced, gaining fiscal space, and based on that do the investment that is needed on infrastructures, on health, education, and improve the business environment for the local production to come, industry, agriculture, fisheries, tourism, and with that jobs creation, fiscal revenues, growth.
So, Minister, on the fuel subsidies that you've had to pull back, what kind of impact will that have on inflation?
Well, we are seeing the first signs impact, but we expect after that with monetary policy at one side, central bank, and also some measures to see what is happening at the distribution and commerce, some speculation as well. Moving on that 2 directions, we will see after some time we're coming back to the downward trend tendency.
Do you worry about social unrest because of these fuel subsidies being taken away?
We are working hard on the mitigation measures. We increased the monthly amount of money for the poor family, especially on the rural areas. We commit more money to our program, cash transfer program. We designed a prepaid card to address the costs of transport, especially for people that use taxis and motor taxis. We have big vans and also motors that address the lack of buses and metro and those kind of solutions. So we are getting a prepaid for these transports just to make sure that we protect the final consumers. And we are also established that fund, the employment fund, and we hope with that we will somehow mitigate the impact of that movement that we started.
And so, Minister, in terms of growth prospects, have you revised upwards or downwards some of your estimates for this year and next?
We are following closely the oil sector. About the non-oil sector, we're still very positive, and we think that it will perform as we were expecting. But the oil sector, we are seeing some downward trajectory on the oil production. And we will need to keep moving, to keep looking to see how the impact will be at overall GDP performance. We still confident on the 3% growth this year, but let's see in the next months how the oil production will perform, and to prepare scenarios based on the fact if we see the reflection of that downwards on oil production in our growth.
Minister, in terms of financing, do you need to issue Euro bonds? Is it something that you'd be interested in doing?
For now, no. We will continue monitoring the markets, the conditions, the risk perception, and we will step in only when we understand that doing it, we will not put ourselves in a worse position in terms of debt servicing.
So you think at the moment it's hard? There's just not enough demand, or what's going on?
The interest rate that the market will ask us to pay is too high for us to address. So we will continue to follow, do our internal home, some housekeeping, and just when we understand that the markets are fine enough for us, we will step in.
Minister, thanks so much, as always, for joining us. That was Vera Daves de Souza, the Angolan finance minister. Now, coming up, the Fed chair, Jay Powell, of course, was talking yesterday. He signaled rates are heading higher, but at a more moderate pace. So he told U.S. lawmakers 2 more hikes this year is a pretty good bet. We'll hear about the markets and what they're pricing in next. This is Bloomberg.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays. Our studios in New York and San Francisco. Our expert hosts of the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Messer and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. Of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority. Bloomberg UK, your your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
Well, that was the actually we'll hear from the Federal Reserve Chair, Jay Powell, in just a second, telling Congress that Fed policymakers expect interest rates and they will need to move higher to contain price pressure. So let's listen. I think we have Jay Powell, otherwise we know exactly what he said. It's basically he wants to be more hawkish, so he wants to hike more, but maybe not so aggressively. A couple of other things that we need to watch out for because it's a big, big central bank day. So first, let's hear from Jay Powell, and then I'll have a full roundup of what else we heard.
We never used the word pause, and I wouldn't use it here today. What we did was we agreed to maintain the rate at that meeting. Almost every single of the 16 of the 18 participants on the FOMC wrote down that they do believe it'll be appropriate to raise rates, and a big majority believes raise rates twice this year. And I think that's a pretty good guess of what will happen if the economy performs about as expected.
Well, how to put it, basically central banks across the world have changed the animal spirits of markets. They're really wielding more rate increases and talking about really having to fight inflation maybe for longer. Then the other one that really surprised today is Norway Central Bank lifting its key deposit rate by 50 basis points to 3.75%. We also had the SNB, a smaller increase, but saying they will keep on fighting, of course, inflation. Then the big one, the BOE. What's priced in? I think there was a huge repricing, 40% of markets now expecting a 50 basis point hike. This is a vote by committee, so we'll see how they vote at 12 p.m. UK time, and then we'll see forward bets on how that changes the markets. I think a lot of market participants have interest rates in the UK at 6% by year end. Now let's return here to Paris, President Macron's summit on global finance, and bring in our climate reporter, Akshat Ratti, who understands the nuts and bolts of what could be announced. Akshat, I don't know whether this will, good morning, first of all, I don't know whether this will actually yield anything concrete, or whether this is a feel-good summit for Emmanuel Macron and the people here.
Well, to understand it, it's really complex, and I do not fully understand it. But what we do know is that without making many of the changes that are being talked about today, there is going to be no way to try to meet climate goals. And all the leaders who've come here appreciate that. You know, we had a climate activist sit in front of Mohammed bin Salman from Saudi Arabia. She's telling him, stop digging up oil. It's a complicated situation, but these conversations are happening. And what we will get at the end will be a statement which will say, we support A, B, C, D, and all the names who arrived have approved.
But support doesn't mean that we have a Bretton Woods agreement, or does it?
No, because this is not the forum for it. So the place where the change will happen will be at the annual meetings where the shareholders will vote. But getting them agreed upon what those changes will be requires time, and this summit is mainly to get that consensus going.
Yeah, so we have a consensus. I mean, it's still quite impressive. You're saying, there's a Saudi crown prince, there's President Lula, there's a president of Nigeria, so really heavy hitters, and the premier of China. We haven't seen Janet Yellen together with a high-ranking Chinese official to talk about these issues in Sabling for a long time. Akshat, thank you so much, as always, Akshat Ratti. Now, we'll have plenty more, of course, from the summit throughout the day. A little bit later on, in about 40 minutes or so, we'll also be speaking to the French Finance Minister, Bruno Le Maire. He's one of the hosts, of course, of this event, and we'll track any progress when it comes to tackling finance and climate change. This is Bloomberg.
From the world of politics.
We're not going to be relying
upon countries whose values we don't share.
To the world of business.
It's all about corporate power at the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We're going to be more excited what's in store for you.
How long will it take? How many years?
Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join hosts Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
Well, I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Lines.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
That really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most. It's not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure. With two more potentially to come.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority.
Japan's critical role in the global economy is changing as the world recalibrates. After decades of stagnation, Japan's leaders are forging a more innovative and sustainable path forward to revitalize the nation. Corporate giants, policymakers, and pioneers tell us how they're doing just that. Every week on Japan Ahead, right here on Bloomberg Television.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Tag on the product may read Made in the USA, but the sign on the CEO's door often says Made in India. Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
This is Bloomberg Surveillance Early Edition with Danny Berger and Kriti Gupta.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. Investors keep an eye on a host of central bank decisions. The Swiss National Bank and Norges Bank raise rates as markets anticipate the Bank of England to follow suit with a 13th hike. It's day 2 on Capitol Hill. Chair Powell doubles down on the Fed's expectation for additional hikes in the first day of the hearing. Traders bet the bank will rise one more time in July. And a glimmer of hope comes from Deutsche. CEO Christian Saving says he expects trading results to improve in the second half. More from Bloomberg's exclusive interview coming up. Good morning and welcome to Bloomberg Surveillance. This is the early edition. I'm Danny Berger in London. Kriti Gupta is in New York. And Kriti, we did it. We got it. We got a jumbo surprise from Norway. Now we just got to wait and see whether we're going to get a surprise from the BOE.
Yeah, and I would argue even a surprise in the opposite direction from the Swiss National Bank as well. You're seeing a lot of different cross currents in Europe right now, which I think is interesting for the U.S. session because ahead of the BOE, we're really kind of waiting for that heavy hitter. The market action is kind of mixed, and here's what I mean by that. We'll start with futures here, which are kind of taking a very cautious approach. 4,400 on those contracts, down about 0.2%. I'm going to call it some caution
cautious optimism, or Danny, I think yesterday you called it cautious pessimism, perhaps. But the 10-year yield is where I'm really interested in, because that's really where you're going to see the ripple effects of what the BOE does, and arguably the ripple effects of what the S&B and Norges Bank did as well. The 10-year yield at 376, we'll call it, higher by 4 basis points already. So you're already seeing some of that volatility get sown into the markets, and it's only 5 a.m. in New York. So what happens when we get closer and closer to that Bank of England decision? As yields go higher, the dollar follows, well, in theory at least. And right now, again, those cross currents in the FX space are pulling the dollar in very different directions. Overnight, we're getting some data out of China, out of South Korea, out of Japan as well, basically saying that, look, the Chinese recovery isn't as strong as expected. That's going to be weighing on those currencies that you were going to see, for example, the Korean won, the Japanese yen, for example. That's going to push the dollar higher. Here's what's going to push it lower. A lot of the central bank decisions that we got out of Europe right now, the Bank of England expectation, and of course, Norges Bank as well, going to pull the dollar in the other direction, which is why you're seeing net-net, the Bloomberg Dollar Index kind of flat right now. So really keep an eye on that, because that's going to change based on what we see on the other side of the Atlantic. Bitcoin is where it gets interesting. Now, Danny, I don't usually check in on Bitcoin as kind of a macro asset, but here we are crossing $30,000 on some news that BlackRock is now going to be talking about kind of filing it and incorporating it, into their ETFs. Why this is significant is on a technical basis, because now you're crossing that 30,000 level, which Bitcoin hasn't tested in quite a while. It's also crossed its 200-day moving average if you want to apply technicals to Bitcoin at the end of the day. But to see that optimism on a sea of red, that's pretty interesting, Danny.
The sea of red continues in Europe, Kriti. I got to say, I'm so pumped about this Norges Bank decision. I'm so pumped we're talking about jumbo rate hikes again. Honestly, just because I want to say the word jumbo. It's very fun. Anyway, it is a sell-off that's intensifying in Europe. It's looking like something real versus just consolidation, which is what it felt like to start the week. We're seeing declines of more than 1% for a lot of these regions, for the CAC 40, for the FTSE MIB, for the IBEX. But I want to show you currencies because, Kriti, I mean, you pointed this out. That's really where the excitement is today. Now, if you were trading the Swiss franc, I honestly do not envy you. It was really wild to watch the session, because right leading up into the S&B decision, it started to gain. In fact, it strengthened the most versus the yen since the franc was floating, not pegged anymore. But then we got that decision that it was 25 basis points. It wasn't a hawkish surprise from the S&B. So now this cross, which again had hit a record high since it was no longer pegged, is now back down. The yen is gaining against the Swiss franc. Now, elsewhere in the world of currencies, again, it was the jumbo rate hike from Norway. Not only did they hike by 50 basis points, but their peak rate is significantly higher. Their forecast was for 3.6%. Now it is 4.2%. So the core is hot in Norway. They have a tight labor market, so they are hiking. And that's the same exact dynamic for the Bank of England. Right now, we're not doing much on sterling, really just waiting for that decision, Kriti.
I want to stick with that story, Danny, because of course it's going to have ripple effects around the world. A rate hike is all but certain when the Bank of England meets today. After the May inflation print showed core CPI, as you just mentioned, still on the rise. For more, we're joined by Jamie Rush, our chief European economist. Jamie, talk to us about the odds of the BOE going 50 today.
I actually think they're going to pass on that. I think 25 basis points would be sufficient. Let me tell you why. So if you think about how loans are priced in the economy, 2-year, 5-year loans, they're not based on bank rate, they're based on swap rates, and those have really climbed. So monetary policy is already acting as a massive drag on the UK economy. The repricing over the past couple of months of rate expectations is going to squeeze further. The bank doesn't want to add 50 basis points to that mix, so I think they will take a non-panicked approach, 25 basis points, and not push back on market pricing.
You know, it's interesting because when it comes to the S&B, we did see them downgrade their inflation forecast. I mean, I'm assuming that's because they hiked, but I mean, why hike if they are seeing maybe a less pernicious environment?
Well, there's a couple of things. I mean, they've got to position themselves relative to the ECB and the Fed if they want to avoid any movement in the exchange rate. And for us, you know, sat here in the UK where core inflation is 7%, we look at them, they've got core inflation of 1.9%, we think, hey, what's the problem? Well, they don't like core inflation of 1.9%, they want it lower. Yeah. So I think they're going to keep going with the ECB, probably September as well.
Well, Jamie, at the start of this segment, Danny pointed out just kind of the monster move we got from the Norges Bank, largely unexpected by the investor consensus. Talk to us a little bit about where that's coming from here. I don't think it's lost on me that the Bank of Canada, the RBA, and Norges Bank have all hiked to the upside. Is there a commodity narrative going on there?
I think the Norges Bank is in a specific position in that historically rates have always been higher than the ECB, and they were below. So I think they had a bit of catching up to do. So I think that helps explain it. They also have that tight labour market, high core inflation. So it's reasonable.
Well, a lot to digest there. Jamie Rush, all over it, our chief European economist over at Bloomberg Economics. We'll also be speaking, by the way, with the Swiss National Bank President Thomas Jordan later today. Stay tuned for that interview. In the meantime, stateside, we go to the Federal Reserve. Fed Chair Jay Powell testifying before the House Financial Committee, leaning on his hawkish message after a pause last week.
We never used the word pause, and I wouldn't use it here today. What we did was we agreed to maintain the rate at that meeting. Almost every single of the 16 of the 18 participants on the FOMC wrote down that they do believe it'll be appropriate to raise rates, and a big majority believes raise rates twice this year. And I think that's a pretty good guess of what will happen if the economy performs about as expected.
Joining us now is Bloomberg's Paul Dobson. Paul, talk to us about the biggest takeaways here from Chairman Powell's testimony. Has he said anything that perhaps other central banks around the world might kind of rip a page out of?
Yeah, well, you heard the guy, talking about 2 more hikes at least this year. Maybe not all guns blazing and done in one go. Maybe a slower pace, hike, pause. But he's still talking about doing more, and that's exactly what you've been talking about on the top of the show with all of the other central banks around the world moving in that same direction, starting with Australia and Canada, which surprised earlier in the month, and now we see Norges Bank going aggressive as well. Expectations high for what the rest of the central banking community is going to do. 1 or 2 setbacks around the world, maybe the market can survive, but if there's complete unanimity in the terms of these blows coming one after the other from the central banks, at some point you're going to think that that's going to check that momentum that we've seen in equity markets so far this year. Over on the rate side, you've seen the yield curve inversion getting ever more pronounced, back to 100 basis points between the rate on the US 2-year and the yield on the 10-year bond as well. It shows you people are pricing in more aggressive Fed short term, but the long-term impact is going to be, a need to slam on the brakes at some point as well.
But even before we had those decisions today, we still had markets selling off yesterday in reaction to Powell. And I guess, Paul, I just kind of have a head scratcher about that because, he didn't really say anything different than last week's FOMC presser, did he?
I don't think that he said anything different, but he emphasized and he stuck very much to the message and to his guns and to the communication. I think that, markets are a little bit like naughty school children at the moment, trying to see where they can push things, but keep getting reminded or scolded by the teachers at the central banks, that they need to pay attention to this because they're not gonna check or they're not gonna change their mind. If there is any more dovish voices from the Fed, it seems to be from the non-voters rather than the voting side of it at the moment. There is still very much that kind of, stance from policymakers that they want to get this done and they want to get inflation in check. And I think, Powell almost said explicitly, if that causes a slowdown in growth, so be it. That's the intention right now.
Paul, I've said this earlier, I'll say it again, and I stand by it, that the most interesting thing about the hearing yesterday was Powell saying that he is a Grateful Dead fan. He has confirmed the rumors. Paul, thank you so much. That's Bloomberg's Paul Dobson. Now, after warning about a 20% drop in quarterly trading revenue last week, Deutsche Bank CEO Christian Sewing told Bloomberg in an exclusive interview that recovery is in sight.
In Q3 and Q4, there is momentum in the business on the fixed side, but for us as a strategy of Deutsche Bank, it is important that we further balance out the investment bank overall.
Joining us now is Bloomberg's Guy Johnson, who conducted that exclusive interview. Guy, what were your big takeaways?
Well, I want to fold in what we've been talking to Christian Sewing today about and fold it into the conversation you've been having about rates. So James von Moltke a few days back says Q2 we think we're going to see a drop of between 15 to 20% in FICC revenue. What Christian Sewing today said is, I think for the rest of the year we're going to see a recovery, and the reason is that he doesn't see the macro uncertainty that we see in evidence this morning. You've been talking about the Norges Bank, we're going to get the Bank of England. He doesn't see that abating, and this macro instability is perfect for FICC trading. So basically, he sees it continuing, and as a result of which, he sees the FICC business bouncing back in the second half of the year. So this environment he doesn't see going away anytime soon. Get used to it. It's going to be with us for a while.
Well, guys, speaking of a really difficult environment, talk to us about the deal environment there. Does he have any more deals up his sleeve?
Okay, Critty, so he surprised everybody. He's very good at keeping secrets clear because he surprised everybody with the Numis transaction that Deutsche Bank did a couple of months ago, April, May. Nobody saw that one coming. Everybody thought that they were going to do a deal in advisory, in wealth management. They did a deal in advisory. The question is, what comes next? He kind of hinted that if he sees other good transactions out there, he will take them. He also hinted that he's looking to hire really good people right now. He's looking to provide balance throughout the entire business. He's trying to move it away from trading to focus on other areas, more stable areas, more capital light areas. And you get the impression that if there are other transactions that come up, he is willing to take that. But he's also very clear that he is in a position where he wants this bank to be profitable and he wants to continue to return money to shareholders. He wants that stability because that's the bedrock on which his plan is built. But yeah, maybe he has got a few other tricks up his sleeve. Maybe he has got a few more secrets to tell. He certainly gave a few hints about that today.
Guy, if anyone can get those secrets out, it's you.
I will try.
Guy, really fantastic interview. Bloomberg's Guy Johnson there, of course, speaking earlier exclusively to Deutsche Bank's CEO. Now, coming up, speaking of exclusive conversations, we're going to be interviewing the French Finance Minister, Bruno Le Maire, at the summit for a new financial pact in Paris. And we're going to push ahead to the BOE decision. We're going to be speaking with Sonali Punhani, head of UK economics at Credit Suisse. This is Bloomberg.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
Right.
so it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right? And
Yes.
making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Danny Berger in London. Look, the question today is all about central banks in Europe. You're starting to see, of course, a lot of anticipation for what the BOE is going to do, expected perhaps to hike for a 13th time and maybe even go as high as 50 if you are in that boat. What's interesting, though, is at the same time you get decisions out of the Swiss National Bank and Norges Bank, both surprising in different directions. The result is a mixed picture for the dollar, which is kind of net flat at the moment. But take a look at what's driving it, that strength strength in the Norwegian krona is actually weighing on the dollar the most. Pretty substantial when you compare it to, say, what the Swiss franc is doing off of the S&B, only hiking 25 basis points. Again, surprising, but perhaps to the dovish side, that's actually perhaps strengthening the dollar just a little bit. Joining us now is Bloomberg's Eddie Vanderwall to kind of break it all down. A lot of different cross currents here. Eddie, Kit Jukes over at SocGen put out a note this morning, and he asked the question, when do rate hikes ultimately weigh on currencies instead of going the other way around? I'll put that question to you. What do you think?
Yeah, absolutely. Look, I think Kit was alluding to the pound there, and there's a lot of expectation that the Bank of England will have to become aggressive. But we've got to look at the reasons, right? The reasons are that inflation remains hot here, and the fear is that topples the housing market, which then brings the the UK into recession. And I think that's why, for the UK in particular, if we see those aggressive moves from the BOE, it may not be supportive of the pound.
Yeah, and I know there's some, current accounts dynamics in there too. But okay, so you have Norges Bank surprising with a hawkish decision. Inflation in the UK is obviously very hot too. To what degree is this a global trend of re-upping rate hikes, re-upping inflation,
right,
or is this very contained?
Look, I think this is what we are seeing here is the emergence of a new trend, which is central bank divergence, right? I think there are various economies around the world that are in very different stages, both of their rate hikes, but also just of their economic cycle, right? And I think the UK is at the one extreme there. We're struggling still with inflation, with slower growth, whereas other places like the US, growth is still doing well, and they don't need to hike as much anymore because inflation's starting to come down. And then on the other hand, you've got China, right, where they are actively boosting the economy because things are slowing down. I think post-COVID, we had all of the central banks in the same boat, and right now we're just starting to see that divergence.
So, Eddie, it feels like then, at the end of the day, even though perhaps in the short term you have these kind of big moves being driven by those interest rate differentials, that is not going to be the long-term play when it comes to both the bond market and the FX market.
Yeah, I think you've got to look at each economy and you've got to figure out why it is that they're doing what they're doing. Are they doing this to support the economy? Are they doing it out of almost a sense of panic? In the UK, it really feels like things are a little bit out of control. Inflation keeps running hot with every reading. And the Bank of England may just feel that they both have to surprise to the upside and give some hawkish guidance, but that at the same time may just topple the housing market. So yes, I think it's a very sticky situation in some places.
One risk asset that cares not one bit about any of this, because it's got its own thing going on. You know where I'm going, Eddie. It's Bitcoin.
I do.
I mean, there was this BlackRock ETF last week that was filed. I mean, is it fair to say, okay, if BlackRock is filing an ETF for Bitcoin, they're feeling confident that something's going to happen?
Look, I think BlackRock knows a good bandwagon when it sees one, right? I think what we're seeing here is Bitcoin had a tough 2022 and is probably coming back a little bit on the expectations of some sort of, of a halving of supply again next year. And every time that we have seen those halvings of supply, which is something that's built into the Bitcoin algorithm, you do see prices generally exploding higher. And then you see a lot of institutional money and institutional interest coming back. I think that the BlackRock and others are trying to get ahead of that curve because, Bitcoin cycles are pretty well defined at this point.
Yeah, just I guess you need the SEC to actually approve one of these things to see how it plays out. Eddie, thank you so much for joining us. As always, that is Bloomberg's Eddie Vanderwall. And for more market analysis, check out MLive Go on your terminal. This is Bloomberg.
analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
The EU is one of the largest and wealthiest consumer markets in the world, and there are very few global companies that can afford not to trade in the EU. So as the price for accessing the European market, these companies need to obey European regulations. That's not surprising. But often these companies choose that they will extend the European standards across their global conduct and their global production because they want to avoid the cost of complying with multiple different regulatory regimes. So there are benefits to standardization, benefits to uniform production. So all the EU needs to do is to regulate the single market. And it's then the market forces and the business incentives of global companies that transform that EU rule.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Today, I would say perhaps only second to AI right now, which is AI has got so much going on and folks are so excited about it. Climate tech is the hottest area to be in.
This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Kriti Gupta is in New York. Now, the U.S. Navy is sending specialist deep-sea recovery equipment near the wreck of the Titanic in the latest search effort to find the Titan submersible. Noises picked up in the past 2 days are yet to be identified. We will keep you up to date on this story at a critical juncture for those waiting help. Now, over in Washington, India Prime Minister Narendra Modi and President Biden will hold their bilateral meeting later today. The two leaders are expected to announce a series of defense and commercial deals that includes an agreement between GE and Indian aircraft manufacturer Hindustan. And Kriti, I mean, it's been a busy week for Modi. Elon Musk, of course, was just talking about wanting to ramp up production there, too. That's Jay Powell. We'll get to him in just a moment. But yeah, Kriti, I think this is a really interesting moment for India.
Yeah, it really is. Look, tech and kind of the collaboration there is at the top of the agenda. And this is really important when you talk about not just Tesla, but even Apple diversifying their supply chain away from China. That is a really big deal at a time when Modi is looking for that massive kind of capital investment and really building on his infrastructure platform.
Right, and as the U.S. goes on its, course of de-risking, not just from a corporate side, but from a government side, this is, something Biden has been talking about. All right, Kriti, I teased to this earlier in the show, and here's what caught my eye. Honestly, was the most important thing about Chair Powell's testimony on Capitol Hill yesterday. Take a listen.
I was excited to see that from public reporting that you were at the most recent Dead and Company show. I've been to this version with John Mayer and enjoyed it, but we weren't here. How was the show? Did you like it?
No, it was terrific. What can I say? So it was great. I've been a Grateful Dead fan for 50 years, so.
Okay, Kriti, I love this story because, of course, the background is there's that tweet going around of someone who looked suspiciously like Jay Powell at a Grateful Dead concert.
So we still haven't gotten confirmation if he was actually there or not, if that was indeed him in the red shirt. But it is good to know that he's a fan.
He's a fan, and apparently, like everyone in the finance world is. Joe Weisenthal tweeted that literally during that congressional testimony, he was at a Grateful Dead conference in Citi Field. You just know that Jay Powell's heart was breaking, that he had to go to Congress while his fellow Deadheads were enjoying some sweet tunes. I should really listen to them. I honestly know nothing about the Grateful Dead. All right. Kriti, coming up, we're gonna talk about something you and I both know, right? It is, of course, the UK. It is the BOE. Sonali Punhani of Credit Suisse, head of UK economics, is going to be joining us next. This is Bloomberg.
Been so used to the fact that every time there's a problem, central banks come and ease. This has been the kind of playbook, throughout my career, before that, after I left. Now we're in a very different environment. Central banks actually have to create a recession, in essence, to get back to price stability. So it's a complete reversal of the modus operandi, in a sense, of central banks as they've known it for the last several decades. So that's why it's not so much that they're getting something wrong. They've now acknowledged that there is this trade-off, these costs to pay, but it's a completely different way of thinking about central banks, and it's a different role. Another way to put it is they have to be unpopular now in order to get inflation back down, where it used to be you could count on them each time to rescue you, to stabilize the system, to bring support. And that has shifted, and I think many people, even in the markets, have not quite understood in my mind how much we are now in a different regime compared to the last 4 decades, effectively.
So it's what, almost an easing bias in the markets? How would you describe it?
In the U.S., yes. And I think it's this idea, this almost pre-programmed idea, when there is a problem, i.e. potential recession, central banks will come and ease.
This June, in honor of Pride Month and Juneteenth, Bloomberg brings you a special equality series every Thursday in June at 1 p.m. Eastern. Bloomberg Equality, celebrating inclusion this Pride Month.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Investors keeping an eye on a host of central bank decisions. The Swiss National Bank and Norges Bank raised rates as markets anticipate the Bank of England to follow suit with a 13th hike. And day 2 on Capitol Hill, Chair Powell doubles down on the Fed's expectation for additional hikes in the first day of the hearing. Traders are betting that the bank is going to raise one more time in July. And a glimmer of hope coming from Deutsche Bank. CEO Christian Saving says he expects trading results to improve in the second half of the year. I'm Kriti Gupta in New York with Danny Berger in London. Danny, I feel like central bank palooza is the perfect description for the pre-market action we're seeing this morning.
And you know who we're going to be hiring to play at Central Bank Palooza. It's obviously the Grateful Dead. I swear I'll let this go at some point. Still the best part of Powell's testimony. Okay, look, I am so excited about Norges Bank. The BOE better show up today because this at the moment is the most fascinating central bank decision. And we're looking at the NOK really gaining off the back of a 50 basis point hike from the Norwegian Central Bank. The expectation had been for 25, but they're having hot core inflation and a tight labor market among other factors. So here's versus the euro. Euro falls about 1.2% versus the NOK. Now, overall stocks, those are sour this morning for yet another day this week. Every day so far this week, European stocks have declined, except for Ocado, the grocery store service. Some reports from the time that they might get a bid. Those shares are up something like 40%. The Swissy, that is now starting to fall versus the yen. This just shows the perils of trading central banks. Right before the S&B's decision, this thing strengthened pretty significantly with maybe some expectations the S&B might do 50 like Norges Bank, but nope, they just go 25. And Critty, we're still waiting to see whether the BOE surprises us. For now, sterling unchanged versus the dollar.
Yeah, certainly going to have ripple effects on central banking policy stateside. Danny, you have 30 minutes to squeeze in as many Grateful Dead references as you can. And I then think perhaps the statute of limitations comes up. Exactly. So futures that we're looking at 43.99 on the benchmark here, lower by about 0.2%. Call it a little bit of cautious pessimism, as Danny coined the phrase earlier. You're not seeing a ton of movement here, but really all the action is in the bond market. And it really speaks to the idea of what Danny was just talking about. What kind of precedent does the Bank of England set? Is this a one-off? Is this an isolated case? Or is this something that's going to have ripple effects to the Federal Reserve? When you look at the bond market, the answer is yes, because the idea here is that the 10-year yield might just take its cue from what you see in the gilts market across the Atlantic. 374 at the moment, higher by about 3 basis points. So already seeing the volatility kind of seep in there. And when you see that move in yields, you would expect the FX story to follow. But right now, the Bloomberg Dollar Index kind of stuck between a rock and a hard place. The Norwegian krona on one end, the Swiss franc, and even the pound on the other, kind of pulling it in opposite directions. So net on the surface, it looks like nothing's happening. But underneath the surface, a lot of those FX dynamics, Danny, that you just laid out are going to be crucial. Of course, Bitcoin is also going to be on the top of our radar. Over 30,000, crossing its 200-day moving average. We don't really look at this as a macro asset as of late, but it is worth saying that this is higher by about 0.5% on news about BlackRock and their ETF. We're going to dig into that in a little bit, but really the only asset that's in the green, Danny, among a sea of red.
We need something to keep us positive. Well, let's look forward to the Bank of England rate decision. It comes up in just over an hour, and the expectation is for another hike, but the size of that hike will certainly be the key focus as inflation in the UK continues to remain sticky. For more, we're joined by the head of UK economics at Credit Suisse. It is Sonali Bunhani. Sonali, so great to see you.
Lovely to be here.
It's never a boring moment when you join us because it's always around a BOE rate decision. So what do you think? Are they just going to go 25 today? Could they surprise?
I think they're going to go 25. The base case is that. I mean, obviously, what matters is not just the decision, but also the vote structure, the guidance, what they say for future rate hikes. And I think the reason they might do 25 today is because, they haven't given us any prior guidance in the past that they're going to step up the pace of hiking. And I feel like, just without any guidance, stepping up the pace of hiking could create more financial volatility, especially at a time when the markets are already pricing in an extremely high terminal rate. And I think the problem is that, the BOE still believes that, a large part of the tightening is still to feed through to the economy. And as a result, I think that can make them a little more cautious than what the markets are expecting them to do.
You make a really good point about the fragility of this UK market. Now, you talk about how the vote split might come up. What are you looking for there to give you hints of what the BOE does after today's decision?
Yeah, I think there are two key points, right? One is the vote split, and I think there could be 1 or 2 members voting for a 50 basis points hike. So even though the majority votes for 25, we could have 1 or 2 members, and that could give a signal of future hikes decisions by the Bank of England. The second is what they do with the guidance. I mean, they did drop the word forceful, respond forcefully, which meant 50 basis points hike, quote unquote, in the last few meetings, but it could be agreed that in this meeting they could reintroduce that forceful guidance, which basically means that they're keeping the door open for 50 basis points. And then I think everything is data dependent. We have one more inflation and labor market report before the August meeting. So if that surprises to the upside again, then the case for doing a 50 in August would rise. And at the same time, August is also a meeting, where they have their inflation forecast, where there's a press conference, so they can explain the decision better in an August MPR month than today, where you just get the minutes. And if they do a 50, I think in terms of communication, it might not go that well.
Well, Sonali, you did mention that this is at the end of the day based on the data that we are going to get in terms of opening the door to 50. What would that look like? What would it take to get there?
Yeah, I mean, we've been seeing in the last few months that we've seen core inflation continue to surprise to the upside and also wage growth surprising to the upside. So they're both close to 7%. And I think it's that upward trend. If that continues, then the Bank of England would be surprised to the upside. In the previous meetings, they have said that, they expect the labor market to slow. They expect the wage growth numbers to slow. And so far, we are not seeing evidence of that. But if that continues even over the summer and we don't end up seeing a drop in core inflation or a drop in wage growth, then the Bank of England, I think, would need to move to more aggressive action. And then I think 50 gets back on the table for August.
So Sonali, that's the short-term picture. Let's talk about the long-term here. I think we had a chart earlier this week that said the last time we saw inflation this high, the Bank of England was at a 15% kind of terminal rate there. Talk to us a little bit about the way that UK inflation is structured here. John Author's pointing out overnight that if you look at the case of the 70s and the 90s, the UK inflation story has been significantly stronger than its European peers. Explain to our international audience why that is.
Yeah, I mean, I think at least in this moment, there is a bit of a structural issue in the UK economy that potentially is driving inflation higher and is making inflation slower to come down. I mean, we've had labor shortages in the last few months, or since the pandemic, I would say, which have been quite stark. And, it could be because of, long-term sickness, because of which people have left the labor force. It could be because of Brexit. But there are reasons why the labor force is just structurally less than what it used to be. And I think those labor shortages are the reason why wage growth is being fueled into the economy, and that's feeding into inflation. If you look at the other components of inflation currently, food and energy, those are coming down, and I think the Bank of England would be encouraged by the fact that those elements of inflation are coming down. But the one that's really sticky and that's been the problem has been core inflation, and I would say the labor market and the shortages that we are seeing in the labor market today in the UK maybe distinguishes it from the rest of the developed markets where the labor market is loosening and you're seeing signs of wage growth cooling, whereas in the UK we are not so far.
The popular UK media has certainly gone after Andrew Bailey. One of our producers, Valerie Teitel, and I put together this list of some of the commentary. The Times over the weekend saying Bailey has run out of excuses. The Telegraph saying that this is a battle he can't win. My personal favorite from May, The Sun saying monkeys could run the Bank of England better than its current bosses. I'm sure most people would disagree with that, but does that do anything to put pressure on Andrew Bailey seeing this kind of commentary?
Yeah, I mean, I think it does. I think, there is an element of the Bank of England being seen as a central bank where the inflation problem is getting more and more entrenched, and that does come to the credibility and does have an impact on the credibility of the Bank of England. Having said that, I mean, they do have to still work on economic models and see, and go with what they believe and what the right thing to do with the economy is, because obviously the risk is that if they over-tighten and the mortgage and creates a lot of volatility in the mortgage market, then we might be in a sort of a painful recession, which obviously would also be criticized. So I think it's a hard place for the Bank of England to be, because I think they are, if they do too much, then people who, especially the ones who have mortgages, would be the ones who would be criticizing the Bank of England. And if they don't do too much and let inflation out of control, then the criticism would be on the inflation side. So they're not in an enviable position at all. And it's definitely a very difficult job for them to do.
Yeah, no way to make everyone happy in this scenario. Sonali, thank you so much for joining. As always, that's Sonali Punjani of Credit Suisse. Now, coming up, we're going to look ahead to an exclusive interview with French Finance Minister Bruno Le Maire at the summit for a new financial pact in Paris. This is Bloomberg.
Sports and money. They've always gone together.
But never before have sports been so massively influential and as lucrative as they are today.
NFL, NBA, none of them were what they are today when they were born.
There's leagues that are being thought of and built every day.
New teams, new leagues, new business models, even entirely new sports.
I never in a million years would have thought this is what my life would be like.
We set out to find what's happening and what's about to happen at the nexus of business, sports, and culture.
Getting involved from a business perspective was something that was very natural and an easy transition for me.
From the pickleball courts of Arizona,
to the kabaddi tournaments in India,
to the cornhole boards at your local tailgate. This is what's next in sports.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Danny Berger in London. World leaders are gathered in Paris as French President Emmanuel Macron hosts the Summit for a New Global Financing Pact. Bloomberg's Francine Lacqua joins us now from the summit. She gets the best assignments, I have to say. Fran, talk to us about this summit. Talk to us about the significance of being there.
Hi, Kriti. It's pretty fun being here. It is a little bit chaotic. You have 30 heads of states in a quite confined and small space. The focus, of course, is on keeping the momentum on climate change. Now, this is not an easy task because it basically touches here and there on a lot of the financial institutions. It's the World Bank, it's the IMF, it's public and private partnerships on how they can work together to try and tackle the big issues. This is poverty, this is child poverty, this is climate change, this is, of course, the next pandemic. Now, we're not expecting some kind of huge overhaul. There was at some point talk of Macron wanting to do a new Bretton Woods agreement. This is not going to happen. What will probably happen is things here and there, maybe a couple of $100 billion of money transferred, but it's really to try and keep momentum, keeping the dialogue also ahead of COP28, and making sure that world leaders that are also not here understand that it's really finance. It's the way we finance projects and give money to infrastructure projects that could really be a catalyst for some of these huge issues we need to tackle.
Well, the conversation isn't just about clean energy there, Francine. It's about the old dirty stuff, too. I know you spoke with Fatih Birol, the IEA executive director. What were your takeaways from that conversation?
Yeah, so we had a good conversation, Danny, about world growth. And of course, he says when it comes to the price of oil, that could really make or break a nation. So if you don't have the infrastructure, it's almost like catch-22, right? If you don't have infrastructure for clean technology and green, then you go back to the fossil fuel unless it's so expensive that it's better for you to do renewable. Now, the easiest way of dealing with this is also transfer money from the rich nations to the poorer nations, something that we have heard pledged, but no real money has come through. Now, Fatih Birol was extremely interesting when speaking about the perspectives of China, the fact that they had not put all of this stimulus in place, and the dynamics that means for supply and demand to China. What we could see, remember, there's also the Chinese premier here. We could see the shift this afternoon, talk about debt relief, one of the most important and maybe concrete actions that could be taken.
Okay, Francine, thank you so much. That is Bloomberg's Francine Lacqua in Paris. And don't miss, coming up shortly, she's going to have an exclusive interview with the French finance minister, Bruno Le Maire. Again, that'll be in the next hour. Kriti.
Well, as we watch for developments out of Europe, we're also watching for developments out of Washington as well. President Biden due to host Indian Prime Minister Narendra Modi today, and a lot on the agenda. Let's bring in Bloomberg's Roz Matheson for a little bit more. Roz, the timing of this is crucial as a lot of corporate kind of tech companies and others diversify away from China, but that's not all that's on the agenda. Walk us through what these two leaders might talk about.
Well, it's very interesting because, of course, he's only the third leader. He'll get a state dinner under the Biden administration. And, of course, he's addressed Congress before. This will be his second time addressing Congress, just showing the importance of that relationship. And as you say, there'll be a lot of talk about deals in the tech space, the Micron 1 billion chip plant in India, Elon Musk perhaps investing in India. But it's also about boosting defense ties and doing deals in that space. And that's about drawing India away from China and Russia, because it's got very strong trade relationships in the defense space with Russia and China, about bringing them further into the tent with US companies and defense contractors. So that's going to be very much on the agenda. And also there might be a bit of a nudge from the US again to Narendra Modi, because India has walked a fine line on Russia's war in Ukraine, has not overtly condemned Russia, continued to do business with Russia in the energy space and the defense space. So perhaps a bit more encouragement for India to take a stronger line there.
I was going to say, if Modi is hoping to come and promote India as a friend-shoring destination for the U.S., how much of that is already being done? How far away are the two countries from having that, again, friend-shoring type relationship?
Well, they're definitely moving closer. You can see a lot of opportunity for US companies very much in the India market. For starters, giving demographics, of course, a young nation demographically, a lot of opportunity there. But also, you can see efforts to say to India, we need to reshore your supply chains, really. We're open to doing more investment in the US, equally in India. So you can see some progress around things like visa entry for Indians working in the US as well. So it's all part of this idea of binding the US and Indian economies closer together, and certainly diversifying away from China and Russia.
Right. Okay, Roz, thank you so much for that. That is Bloomberg's Roz Matheson. All right, from geopolitics to banks, Deutsche Bank CEO Christian Sewing says he expects trading results to improve in the second half. He sat down with Bloomberg's Guy Johnson.
We have a very strong corporate bank, a very nice developing private bank, and therefore we can confirm our 28 to 29 billion of revenues for this year. We see the momentum. We see a Q2, to be honest, Q2 2023 from a revenue point of view, which is higher than Q2 2022. So overall, I would say this bank is faring well. The strategy is paying off. With regard to the investment bank, we always said that we had a record year. We had an extraordinary strong year in the FIC business in 2022. I still think that actually in Q1 and Q2 we have done well, but the overall market is a bit weaker than in the record year of 2022. But I do believe with some uncertainties, for instance, the debt ceiling issue going away in the US, then with the still complex situation which is in front of us, I do believe that in Q3 and Q4, there is momentum in the business on the fixed side. But for us as a strategy of Deutsche Bank, it is important that we further balance out the investment bank overall. We have a very strong FIC business. We have a very strong DCM business. What we really wanted to achieve is that also the O&A business is further strengthened. And hence, we've put a lot of investments into that.
So just to wrap this part of the conversation up, it's going to be an operating environment for the FIC business that is likely to be less good than last year. Q2 may or may not be a blip. You still see uncertainty in the second half of the year, which could provide opportunity. So on balance, the numbers are likely to be slightly better than the 15 to 20% that James guided to.
That's what I would say for the coming months and weeks. Again, Q2 was also a particular quarter, given the situation also which we had in the US. We can already see also now in June, on the most recent days, that there is momentum in the business. So I'm overall actually quite comfortable also with the FIC business. And again, Q2 was a particular quarter. I would say that the FIC business in Q3 and Q4, I think there was a slight recovery.
Deutsche Bank CEO Christian Sewing there, speaking exclusively to Bloomberg's Guy Johnson, seeing things improving in the second half of this year. More volatility to come, I guess. Now, coming up, speaking of volatility, the market-moving events you need to look out for today. This is Bloomberg.
So let's go inside the boardroom. Let's suppose you win a proxy fight and/or you just get invited onto the board. You go to your first board meeting, and you're the person who's saying you can fix this company, and all of the others on the board of directors are saying, well, we're doing pretty well. How do you get received when you start saying, here's what I wanted you to do?
Well, first of all, we don't bring that to the boardroom. Our time is spent with the CEO, the chairman, the CFO, and share our plans with them outside the boardroom. We try never to solve an issue in a boardroom. Okay, it's always best done the day before, the week before, outside that room. We wouldn't be there if they really were doing well. So it's really hard for them to straight face and tell us we're doing well.
Connection lost.
And we present it with the plan.
Our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Kriti Gupta is in New York. Now let's take a look at what's ahead today. We're going to get the Bank of England's rate decision. That will be at 7 a.m. Eastern time. Were they surprised with the jumbo hike after that hot CPI reading this week? Then it's another round of U.S. jobless claims and existing home sales at 8:30. Will that be another surprise for jobless claims to the upside? Plus, Chair Powell's testimony continues in the Senate at 10 a.m. And then finally, what we're just speaking with Roz Matheson about, President Biden and Prime Minister Modi will be delivering their post-meeting remarks at 12:45. Kriti.
Yeah, and that brings me to some of the major tech names that you should be watching in the pre-market. We talked about, Elon Musk meeting Narendra Modi and some of the other kind of heavyweight tech companies talking about that big investment. But at the top of my mind this morning in the tech universe is the Amazon story. Yesterday, FTC suing Amazon for making it difficult to cancel Prime membership. We know that Lena Khan, one of the heads, or the head, excuse me, of the FTC, is really going hard on some of those tech names. Danny, Amazon shares down about 0.3% off that.
One of the more interesting things about this story, if you read the Bloomberg reporting, that apparently Amazon internally knew that the process was so lengthy that they called trying to cancel Prime the Iliad, of course referring to Homer's epic and lengthy poem.
always a pop culture reference with you, if you can call Homer's Iliad a pop culture reference.
It's old school. Is it pop?
It's culture, for sure. Let's go to perhaps the other part of the tech universe. If you can call Bitcoin tech or commodities or even currencies, that's where I want to go, especially when it comes to some of the major players there. Seeing a little bit of a mixed picture after headlines that pushed Bitcoin higher to above 30,000, surged by some of that ETF optimism around from BlackRock, excuse me. So Coinbase, the exchange, down about 0.2%. But then you have the miners that have way more exposure to the cryptocurrency space naturally. So Riot Platform, for example, and Marathon Digital Holdings, both up about, let's call it 0.2%, Danny.
Yeah, I mean, we've been waiting for a Bitcoin ETF for so long. It's kind of not clear to me if we have this BlackRock ETF giant, rather, like BlackRock entering the market. Does everyone assume, okay, maybe they know something that other people don't know? Or perhaps they think just now is a better time. Some of the volatility has calmed down, and it's certainly done good things, as you point out, to the price of Bitcoin itself.
Yeah, and it's kind of crucial when it comes to just how much appetite there's going to get, because there's one thing to launch an ETF, as you and I both know. It's another thing to actually see the flows to kind of keep it in business. So we'll see how well that's received given the regulatory scrutiny around the world there.
Yeah, I mean, it is, if we were back a few months ago and we're just talking FTX, I don't think we would have said, okay, BlackRock is probably going to apply for an ETF. So a lot has changed, and Bitcoin, it survived it all, past $30,000. All right, that is it for Early Edition. Surveillance, light, surveillance normal. It is ahead with the BOE BOE rate decision, if I can find my words, due at 7 a.m. Eastern, and an exclusive interview with the French finance minister, Bruno Le Maire. All ahead, this is Bloomberg.
Venture capital. It's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television.
The Fed has been trying to talk this market down, and in the end, the equity market has simply ignored it.
Different sectors of the economy are performing in different ways.
The market's gotten more and more selective.
I think we can all agree that the economy is a lot less interest rate sensitive than we thought.
Every single leading indicator of a recession is flashing red, deeply red.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. It is a Bank of England day. We will declare victory with a smart set of guests across all this morning. And we don't have Governor Bailey with us, but if we had Governor Bailey with us, Lisa Abramowitz, it would be interesting, to say the least.
Especially because markets are pricing in 6% rates for the Bank of England by December. This is something people had not expected, and this really almost guarantees a recession. The question now is that inevitability anyway, and is this just a question of how much they can moderate the inflation in the process?
Over in merry old England, Adam Posen of the Peterson Institute taking the high ground with the Telegraph this morning. He doesn't mince words, and I'm going to go beyond the banner. On radio, it's simple. Posen, United Kingdom needs 6.5% rates. Dr. Posen makes clear maybe even higher than that. We say good morning. Jonathan Farrow on assignment.
On vacation.
Different island.
Is that
he
so?
migrated from Capri. I can't pronounce it, but it's a very nice island. John Farrow not with us today, which makes us lesser because he's very good at the Bank of England. Well, as Americans try to keep up as well.
Well, can I just say, heading into the Bank of England, the appetizer, kind of shocking. What we got from the Norges Bank, we got from the Swiss National Bank, basically a surprise 50 basis point rate hike by the Norwegian Central Bank saying more is needed. You have from the Swiss National Bank, more is needed. A hawkish tone across the board, and it raises a question, what are central bankers still getting wrong? That inflation keeps surprising to the upside, and they're not getting a handle on it.
Today's a really important day. You don't see it in the headlines out there in financial media this morning, but there's some terrific tensions there. And the thing that Global Wall Street looks at, Linda Yu, thank you for pointing this out to me earlier on Twitter, the 2-year yield, the 10-year yield, we're now through 100 basis points. That happened a couple of hours ago. This is a huge bellwether. Let's take a moment of silence for Priya Misra, who absolutely provided leadership on this concept of OMG, we'll never get here. Ira Jersey, quite good at Bloomberg, too.
I just took a moment of silence. I think that was enough. I think this is I think that this is the key question here. Does this portend some sort of recession? And is the stock market waking up to what the rates market has been saying for a long time? Because yesterday you did not see a big move in rates. You did see, though, the third straight daily decline in tech stocks in the heavy NASDAQ sector.
So when Lisa gets going on this, I turn to the Bloomberg terminal. And here's a dirty little secret. Pro tip, I use a trading envelope TE function, which sets up the standard deviation move in any series. So Bloomberg over here is going on about the stock market's pulling back.
Love you too, Tom.
And I'm looking here from 2 standard deviations. We've come back just a teensy-weensy amount of gloom.
Totally take your point. It's not a matter of gloom.
Okay,
hold on. Let's just correct the record here. I wasn't saying that this is the end-all, be-all. Suddenly we're going to get this massive crash. What I'm saying is you're seeing a bigger reaction in equities right now than you are in bonds. Bonds have already reset.
Yes.
Our equities now coming to the realization and trying to grapple with the implication of higher rates for longer, which is what the Fed and a lot of other central banks are saying.
Our goal is to speak to smart people. We're going to get to that in a moment. Lisa's got an important brief. Coming up in 10 minutes, the French finance minister, Mr. Macron, with an important conference in Paris and our friends in La Croix, and conversation with Bruno Le Maire. We'll do that in a bit. Shall we brief?
Yeah, we shall. And I should just note that if things hold as they are, we are seeing a 4th straight day of losses on the NASDAQ on equities, which would be the longest streak going back to early May. So this is one of the key questions. At 7 a.m., Bank of England rate decision. This comes as 2-year yields are around the highest in the UK going back to 2008, gaming out 6% UK rates by the end of this year. What does that imply for an economy that has been resilient, has avoided the deep recession? Seems tricky, though. It seems very tricky. Today, in terms of the economic data front, 8:30 a.m. initial jobless claims. We get Chicago Fed National Activity Index and current account balance. 10 a.m. U.S. existing home sales, which should be interesting given the resilience in that sector. Initial jobless claims ticking up. Is this enough to give people confidence that the labor market is loosening to the degree that they want to see it? Yeah.
Oh, please, go ahead. No,
Today is day 2 of Jay Powell, this time in front of the Senate Banking Committee. But yes, it's not just him.
Look at this. Line it up.
Michelle Bowman, Loretta Mester, Tom Barkin, a whole host of speakers. We got a whole host of speakers yesterday. You're laughing, but we've gotten such different. Well, is it though? We actually got a whole host of speakers yesterday, and it was basically, the 3 bears of, and Goldilocks, the 3 bears of all potential rhetoric. You heard from the likes of Atlanta Fed President Raphael Bostic. Let's stay on hold for the rest of the year. Austin Goolsbee, surprisingly hawkish, saying it was a really close call not to hike rates.
Yeah, I saw
and then Fed Chair Jay Powell basically towing the line, but with a little bit more of a hawkish tilt.
We got to be quick here because we got a very busy top of the hour. Hey, bring up that chart again, Amy, if you would. The 4 faces of the Fed speaking today. For all of you worldwide, this is the American difference within the Federal Reserve System. Each of these people is highly unique, and I'll go over to the right side to Mester, the mathematician, and Barkin, who is outstanding at business process, just as 2 ideas. We are rushed this morning, waiting for Bruno Le Maire. Katrina Dudley joins us for a too short a brief this morning with Franklin Mutual as well. Katrina, are interest rates going to drive higher?
I think we've already got the indication from Powell that we have got at least another 2 rate hikes coming before the end of the year. So I think that you really need to trust the Fed. You've talked about how smart the people in the room there are, and I think we agree with that if they're indicating that this was just a pause, and it was a pause that was done on the margin, you've got another 2 rate hikes coming.
What do you make, Katrina, of the fact that bonds have priced in the idea of a more hawkish Fed, hawkish central banks? Stocks perhaps seem to just be waking up to that reality. What's your view?
Well, have a look what's driving the stock market here. It's been this AI trend, which is really a deflationary trend if you think about it, because it is replacing a certain amount of functionality that was done by humans often with technology. So I think that you've got a deflationary trend that's being recognized in the equity markets and the performance you've had in the equity markets, whereas on the bond side, you've got a lot of fear here because the Fed continues to hike. They're hiking, as you say, because we keep seeing these very high inflation prints. So I think that the equity market is actually being very rational. Yes, we've seen in the last couple of days that sell-off, but I think that sell-off is just reflecting a little bit of the interest rate pressures towards the back end of the tech companies' earnings.
So you don't think it necessarily has legs, and you might even lean into this idea that certain sectors of the equity market act as a haven now, given that they have different factors that are underpinning some of the rally. Is that correct?
I think if you take a look at what is driving it, we don't have a lot of breadth in the S&P rally at the moment. You've seen a really big move in the AI stocks. But then if I look over at different markets, you look over at Japan, you look at the European equity market, the European equity markets, they're still facing the same rate hike cycle, but you don't have that lack of breadth and the market's still there and are holding up well. I think that we need to say that the economy is just not as interest rate sensitive today as it has been in the past. We also need to think about it in terms of where the absolute rates are. I think a lot of people have focused on the rate of change, but the level of interest rates that we're talking is at a level that is manageable for companies, and that's what we need to focus on: manageable interest rates that are on a trend that people can predict.
The trend here is the key, Katrina. I would suggest there's a trend of stasis, healing, maybe a little price up, yield down. What if we cut the other way? What happens, for example, with the Bloomberg Total Return Index, global, U.S., whatever, where price gives way? What will be that behavioral response if we get price down, yield up?
I think if we take a look at what's happening with yields, we are really using yields in all of the central banks to fight inflation. So we've got to see some abating of that inflation. You showed the chart earlier. We're starting to see a little tick up in the initial jobless claims, and that's the other factor that the Fed is very much watching here. But everybody that we talk to, particularly around the manufacturing economy, which is the engine of this economy, it is the engine of what is being reshored here in the United States, is holding on to their labor. They're almost like looking at us, I need to train the next generation. So I think as long as we continue to have that labor market strong, the Fed can keep raising rates in order to fight inflation without causing a significant deep recession. Maybe we have a small correction, but I don't think we're looking at having a deep recession here.
Katrina, thank you so much. Katrina Dudley, Franklin Mutual Shares. This is a joy because for America in this summer, it is where we are heading. Without question, everyone I talk to, there is only one destination, and it is Paris. It is stunning anecdotally to see the number of people migrating to France. Leading the way is Francine Lacroix from London at an important conference of Mr. Macron on climate and on the funding for poorer nations. She is in conversation with the tour director for Paris. He's on the bus telling us about the highlights. Bruno Le Maire, tour director this summer. Francine?
Tom, you couldn't be more right, actually. I have to say, everyone's here in Paris, not only because we have 30 heads of state here talking about finance and sustainability and how to tackle poverty, which is really spearheaded by the president of France, but also there was Fashion Week, and it does seem that every American, actually in Europe, has decided to descend on Paris. So congratulations, first of all, on creating so much buzz, not only around some important tackles, but actually Paris is buzzing. A little bit rainy today, but it's back with a vengeance. What are you trying to achieve at this conference? Are we talking about money transfer, debt forgiveness, or keeping the momentum to really try and do a new Bretton Woods agreement?
I think the key purpose is to keep the momentum and to have a new financial architecture for the poorest countries of the world. With President Macron, we don't want the poorest countries in the world to be confronted to a choice between fighting against extreme poverty and fighting against climate change. We want to provide all the financial means for those countries to be efficient in the fight against poverty and in the fight against climate change. This is the key purpose of this summit, and I think that the key point, the key purpose would be to define a new financial architecture for the 21st century.
Minister, are you frustrated that it's taking this much time? I know the Chinese premier is here, which is a great coup because we haven't actually seen U.S. officials and Chinese officials at this high level in a room together talking about these issues. But you've tried to push also voting rights in the IMF. How's that going?
Big things need a long time, so I'm not frustrated. I think that we are totally determined with President Macron to have a final positive outcome for this summit. I think that we are moving on the right direction as far as debt restructuring is concerned. We want to move faster, we want to move quicker. I think that we could have a positive outcome as far as the debt of Zambia and Sri Lanka is concerned. It is really quite good news to have the Chinese Prime Minister here in Paris today, talking with all the head of states, talking with the Secretary Janet Yellen. This is really, I think, a very positive outcome. We also have the new president of the World Bank, and we are defining a new role for the multilateral development banks, providing more money for the poorest countries. So really things are moving on the right direction, and the final outcome must be positive.
Minister, I imagine that in the corridors they talk about trade. They talk about the fact that Secretary Blinken was in China, the fact that we have President Xi with a rapprochement with the U.S. What does this mean for global growth?
I think it's good news because we all want to improve the relationship between the three continents, between China, the US, Europe. We are totally determined to defend our own economic interests in Europe. You know that the new principle, which is now at the core of the European future, has been defined by President Macron, and it is sovereignty. Sovereignty means that we want to defend our technological assets, our economic interests, while talking with China, but being aware that there is a necessity to really have all the necessary tools to defend our economic interests.
But, Minister, given the high inflation, interest rates rising, I mean, the economy is extremely complex. Do we need to attract, in Europe and in France specifically, more Chinese investments?
Yes, we are open to Chinese investments in France. We had yesterday a very fruitful discussion between Prime Minister of the Chinese Republic and the key CEOs of the French economy, and we made very clear that if there is any willingness of the Chinese government to invest more in France and more in Europe, for instance, on the EVs, on the electric batteries, we are welcoming those investments.
I mean, we have a lot of U.S. viewers at this time in the day. Would they worry that actually that investment that could have gone to the U.S. is going elsewhere, including Europe?
No, I think that, climate change means a lot of new investments in green hydrogen, in batteries, in EVs, and so on, solar panels. So there is place for everybody. We should just be very cautious in the way we are defending our technological assets and our technologies, our key technologies. But anyway, the fight against climate change will pave the way for new investments and new innovations. And this is a very good thing that we have fruitful talks and constructive talks between the US, the EU, and China.
Minister, how difficult is it to be in charge of finances of a country at a time where interest rates are going up? Inflation, of course, is going up, which leads to higher interest rates, but at the same time, you need to do economies because of huge deficits across the world.
It's a kind of fine-tuning, I would say, which means that...
Not a juggling act?
Yeah, no, just a fine-tuning, which means that the key priority is to get rid of inflation and to bring the prices down. This is the key priority for the household, of course. Then you have to take into account the necessity to come back to sound public finances. I just announced last Monday that we would cut in public expenses by 10 billion euros at least for next 2024. So this means that we are totally determined to come back to sound public finances and to stick to the path of reforms. We just introduced two key reforms, the reform of the labour market and, of course, the pension reform.
But given what we heard from the Fed and other central banks, do you not worry that interest rate hikes will be so severe that they'll almost have to crush economies or at least put them in a recession to achieve their inflation target?
That's why it's so important to keep a high level of investments and a high level of innovation. If you want to avoid recession, you have to find the right balance between coming back to sound public finances and keeping a high level of investments in the fight against climate change and, of course, in defense, since we have war back on the European soil. This is this balance that we want to preserve. You know that we are in the process of defining the new rules for the European countries, the Stability and Growth Pact. We want those new rules to keep the right balance between investments and sound public finances.
Do they need to be more flexible?
We need flexibility, of course. We need rules. We need all the countries to abide by the rules. But let's be very clear. The key factor for the 21st century for Europe is to keep a high level of investment in innovation.
Minister, thank you so much, as always, for joining us. That was Bruno Le Maire, the French finance minister. And with that, Tom, I'm going to hand it back to you in New York. And we miss you in Paris.
Francine, thanks so much. We wish we were here. Lisa and I. John's on an Italian island somewhere. We don't care about what he thinks right now. But Francine Lacroix, thank you so much there. With Bruno Le Maire, and also I should point out, noted author. It is not often that a finance minister makes a splash Mr. Le Maire is making in friction. I have to admit I have not read the books because my French is lacking.
Otherwise, you'd be reading them in French throughout the evening. Mon Dieu, I will say.
Mon Dieu, où est la bibliothèque?
Right,
That's about it.
Right.
Thank you.
Well, I wonder if Paris is going to become the new Wall Street.
We're going to see, well, this is a loaded question right now. There's a little momentum happening towards the Euro train from London to Paris. This bears careful watching in the coming quarters and years. Let's bring us back right now to the immediacy. We need to do a data check to frame out where we are in 40 minutes towards the Bank of England. As Lisa mentioned, equity's a little light. The VIX still 13.89. And Lisa, I'm going to go to the yield space. I'll start with a headline, 99 basis points. We printed 100 basis points. Massive and new curve inversion, as we saw a number of months ago, but yields creep up.
Well, on the front end, they're creeping up more than on the long end. That's that yield curve inversion. You're seeing the two-year yield at the highest level going back to March 9th, right before the banking crisis. What this tells me is that Fed Chair Jay Powell is correct so far that inflation expectations over the longer term are controlled. When does that change? When we see all of these upside surprises to inflation and a Fed on hold, when do we see that other longer end creep higher in terms of yield price down?
Well, it hasn't crept higher because there's worry about economic slowdown, and that's a dynamic that we face right now and what we'll hear from the governor of the Bank of England here in a bit. But I also know this is the day the currency market began to adjust, and I agree with you, Lisa, it was off Norway and Switzerland as well. For those waking up in America, 3 banks acting today. 2 are out. And you know, to borrow from Peter Hooper, this was hawkish and almost hawkward, wasn't it, out of Oslo?
Well, maybe it was hawkward, but it certainly was clearer than what we got last week from the Federal Reserve. They are going to go again. 3.75% is the new rate. They are expecting to go further. They are further behind the United States. Still, inflation is a problem.
Right.
It is not abating, and that is the theme.
6.7% in May in Norway, and I believe that is a record high. The currency market breaks. DXY under a 102 is very important. 101.959. Yen gives way. Euro a 110 print. This is important. We were looking at 105, 7, 8, 9. Stronger euro out to 1.1005 right now. Confirmed through sterling 127.84 in this argument about 25 or 50 basis points. So much of the story of Europe and what we'll see from Governor Bailey here in 39 minutes is about energy, and it's not only the energy in America and maybe the better tone of West Texas Intermediate 7142, but far more what a leader of petrol costs in the world of the United Kingdom. Olga Karkova is expert at this, Deputy Director of European Energy Security, the Atlantic Council Global Energy Center. Olga, thank you for being so patient with us this morning with the French finance minister shoving him as well into the show. Olga, let me cut to the chase. How much is the war in Ukraine, the geography of a dam break, and other issues, how much is the war in Ukraine affecting continental and United Kingdom oil prices?
What happens in Ukraine does not stay in Ukraine. So any kind of instability, particularly the horrendous costs of the war, will have global implications on prices. So not just in Europe, and the risks and the uncertainty around the upcoming winter. So it's hard to pinpoint an exact percentage point link, but I would say that anything that's happening right now in the region and how well Europe is preparing for potential shortages and other unexpected events that could happen will directly impact the futures and other prices.
Olga, do we see a real shift in terms of diversification of energy sources in Europe based on what we have seen with Russia?
Great progress made on coal, great progress made on oil, natural gas. A lot of the questions are around how permanent this diversification is. Because as of right now, there are no sanctions on Russian natural gas coming into Europe. Russia self-sanctioned itself in terms of the exports. So the diversification so far, so good. There are some exemptions. There's some gas going into Europe through Ukraine, through Turkey, but much smaller quantity. The question is, how do we ensure that the supply security is permanent, that enough projects come online? We're seeing some in the pipeline for the next 10 years, but the question is, how do we ensure that new investments are coming online? And a lot of those are tied to the long-term contracts. And so that will be important to make sure that full 155 BCM of Russian, for example, natural gas gets replaced permanently.
You mentioned coal. You mentioned some of these other sources. We just heard our own Francine Lacroix speaking with Bruno Le Maire of France, the finance minister over there, talking about ESG, talking about climate change. Has the fight to fight climate kind of ended, or not ended, but been postponed as people look to energy security first and foremost? In other words, has there been less discussion about that and more discussion around the immediacy of fueling the homes and the cars and the businesses of the European region?
I think we just look at this conversation differently now, where you don't have to pick one or the other, where you don't have to just say, we'll focus just on climate or just on energy security. The two are now permanently intertwined. So when we talk about a secure, clean energy future, we have to figure out how to do both. A lot of the solutions actually contribute to both of these areas. For example, clean energy solutions such as heat pumps that provide for more efficient ways to manage your home temperatures. They both contribute to decarbonization and less reliance on energy that you need to use at home. At the same time, clean energy production at home, that once again is less reliance on energy imports into your country. But there are other supply chain constraints when we talk about a robust built out of clean energy sources and making sure that those supply chains are diversified so we don't face the same problem as we have with their fossil fuel reliance.
Olga Kova, thank you so much. Greatly appreciate it with the Atlantic Council Global Energy Center this morning there, and some of the issues we're seeing in hydrocarbons. It seems like two worlds almost. We've got cheaper oil here. We're celebrating $71.46 barrel, and there's that unique American thing. We got to drive. We got to have our trucks. We need Madison Avenue completely clogged. We need Fifth Avenue, as yesterday, jammed from 102-ish all the way down to 48th Street. It was like before the pandemic.
This is one of the most confusing moments I can imagine in the fossil fuel space, in part because China has massively shifted to electric vehicles. So the potential demand there has shifted in terms of transportation versus usage of fossil fuels. And around the world, I mean, that shift is sort of uncertain in terms of how much it's taking demand away from the oil space.
The tension here this morning, I want to make clear there's huge market tension out there with currencies on the move and really new inversion. Mark Chandler on short notice scheduled to join us here in 20 minutes, 6:45, leading into BOE with all of his foreign exchange expertise. And Mr. Chandler this morning, Lisa, he mentions no words. Higher for longer is a shift for the gentleman from Bannockburn.
And we have seen that pretty much across the board in terms of the rhetoric out of the central banks in Europe, as well as Fed Chair Jay Powell. He doubled down on that yesterday, and we'll hear that again today.
Very interesting time here. Futures at -9. We're very interested in bonds and foreign exchange. In the 8:30 hour, our Maria Tadeo in conversation with the Prime Minister of Ukraine. Good morning.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, and they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
Right.
so it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right? And
Yes.
making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales.
From the world of politics to the world of business, every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
Bloomberg Surveillance, good morning, everyone. The next 30 minutes is going to be worth watching if you're part of Global Wall Street. Also, I got to straighten out my bow tie for radio. There we go, much better. We have coming up, Simon French will join us in moments, and then Mark Chandler will join us on the astrology of the moment, and then we move on to Bailey of the Bank of England at 7 o'clock. Chandler, French, and Bailey, really looking forward to that here, getting out here in 30 minutes to an important and mysterious Bank of England meeting. Lisa, what's the biggest mystery for you?
just how much they can hike before they torpedo the economy
like 25 or
in
50?
a much more difficult way. Well, the 25 or 50 is going to be interesting, but then the follow-on in August, are they going to follow up with a 50 or a 25 basis point hike? What is the threshold given the inflationary pressures that seem to be much higher than expected?
When the belief changes, the market changes. I'm going to pick on Euro 110.06. This is demonstrably stronger Euro in the last 72 hours. I'm also going to go to the 210 spread out at 99 basis points. Is I think almost on the edge. Is shocking for Wall Street. Lisa, what else do you see?
I'm looking at the pound. I'm trying to understand just how much rate hikes at this point
127.85
will end up actually making it weaker. And if you look at the pound versus the euro, that's the cross that I'm watching at 116, and it's been sort of fading. The question here is, at what point does growth expectations overtake the expectation for further rate hikes? That's going to be important.
Sterling dollar is called the cable. Euro sterling, Francine Lacroix calls a Ferragamo.
Okay.
It's a Ferragamo, just so you know. We're watching Euro sterling. To Americans, this is sort of foreign, but actually the adults like Simon French look at Euro sterling.
So we've got a half an hour until the key Bank of England decision, and this is really the concern. Hot inflation may force it to end up with a 50 basis point rate hike. Jeff Yu of BNY Mellon writing, quote, there may yet be another push for the BOE to front load the pain, reluctantly to engineer a hard landing in the hope that it will be short. There would seem no good options, but on balance, we do not see a 50 basis point or even 75 basis point move this week as the, quote, least bad. And this is the tension time. If you front load the hikes, if you induce some sort of recession, do you allow it to be shorter, or are you just inducing pain that might otherwise be avoided?
For Global Wall Street now, a brief here, 27 minutes away from this key Bank of England meeting. Simon French, chief economist, Pamela Gordon. Simon, let me just get the knitting out of the way. 25 or 50 basis points?
25 for me, but I would associate myself with the comment that there's no easy and there's probably no good decision that the Bank of England has to make in 20 minutes' time.
In honor of Bruno Lemire, I'm going to go Cartesian on you, and it's real simple. Is this a y-axis study or an x-axis study? Adam Posen in the Telegraph this morning talking about 6.5%. That gives me a level y-axis move, or is it about the x-axis moving out in time?
I think it's more an x-axis moving out in time. Tom, I tried to do my homework ahead of this interview. I know you want your historical reference points here, and Alan Blinder's seminal paper back in 2000 in the American Economic Journal about central bank credibility. You know, why do we need it? How do we get it? The Bank of England, unfortunately, and I say it's unfortunate because it's got the market to where it is today, has slightly blown up its own credibility in terms of its communications and some of its policy decisions through the last 18 months. And as a result, it finds itself with the market split today on what to expect, which is where no central bank ever wants to be. And that credibility point eliminates the idea that the bank could pause today and follow the Fed. Why? Well, the key transmission, and this is to Lisa's point about what this does to the economic cycle, is we know that only about a quarter of the rate hike impact impulse has passed through into the real economy so far. They should be able to fall back and say, we've done 440 basis points of hikes. We still see 3/4 of that to crystallize and come out through the mortgage refinancing cycle, but they haven't got the credibility to do that.
Simon, it seems as though originally people were talking about inducing some sort of hard landing to make the whole time frame less long, right? Less painful overall. Is that still in the zeitgeist, or are people moving on to this hope of a soft landing that seems to have overtaken most policymakers in the United States?
All right, so look, I don't ever see, and maybe this is because my background as a labor market economist, is what a hard landing, even if you engineer it short and sharp, presents you in terms of a better long-term economic outcome. The scarring impact, the hysteresis impact of labor losing its attachment with the labor market, and we saw both sides of the Atlantic, the impact of the pandemic of people being removed from their place and of work, their profession, that has a scarring impact in terms of labor market participation, trend growth. And therefore, personally, I go back to your question links nicely with Tom's first one. Let's try try and elongate this through a combination of comms and explaining the transmission mechanism rather than going hard, rather than going quickly, and potentially amplifying that scarring.
I keep thinking about the Mohamed El-Arian comments yesterday in a Bloomberg opinion piece where he was saying that, yes, the UK is slightly idiosyncratic in their inflation. However, it is a warning to the rest of the world, in particular Europe. And I'm wondering, do you see it as the same? That, yes, there are unique features of the inflation, but that is something that you're seeing in places like Norway, in places like Italy, in places like Spain. And this is something that central bankers can't ignore.
I think that's absolutely right. I mean, one of my recent notes decomposes the UK inflation picture and why the 350 basis point spread between headline CPI at the UK level and the G20 average is almost entirely a composition of the energy market and the outsized impact of European gas prices, which of course took their cue from the war in Ukraine. But to your point on spillover second-order effects, not just in-border but cross-border and lessons learned, I think the fact that it has been such a seismic move in the price level, we should expect second-order impacts to be pretty persistent. There were a lot of forecasts out there. We're going to get this immaculate deflation at the start of, those forecasts were put out at the start of Q1 2023. I never bought those. That's not the history of inflation. I don't think it'll be any different in this cycle.
Look, Simon, where we are, and the answer is we end up embedding, in the case of America, the Biden stimulus into our prices, into a permanent level, a permanent lift in inflation. Is that what we've wrought here, where we're just rationalizing out within the markets in quarter to quarter, central bank meeting to central bank meeting, that we're just embedding in a higher one-off level of prices?
Yes, I think we are. I think part of whatever one thinks of the strategic narrative around the Inflation Reduction Act, the reality is you are transmitting economic output, economic activity from geographies where the price point is more competitive to a price point that is higher, is less competitive. Now, you may argue, as many on Capitol Hill do, that there are strong strategic reasons for doing so, and I'm not going to wade into that debate. It's one of the privileges of being in my role. I don't have to get involved in the political debate, but I would say from an economic standpoint, we are embedding a higher price point for every geography that is trying to actively onshore, take control of its supply chains. There are, as I say, good, strong strategic reasons, resilience reasons for that, but let's not pretend it isn't doing a sustained, elevated move in the overall price level.
Simon French, please stay with us. With Panmure Gordon here, we welcome all of you on Bloomberg Radio and Bloomberg Television. We're 20 minutes or so away from an important Bank of England meeting, made ever so important today by this shock from Norway and Switzerland of a reset to higher interest rates as well. Lisa Abramowitz and Tom Keene, Jonathan Farrow on assignment with futures at -12. Yields are higher, dollar weaker. Lisa?
Yeah, and what we've seen so far this morning, just to bring you up to speed, first we had the Swiss National Bank coming out and raising rates by 25 basis points, saying that most likely further tightening is necessary. Then the Norwegian Central Bank coming out with a surprise 50 basis point rate hike, also saying more is needed. And now we are about 22 minutes away from the Bank of England. Simon, as we move forward, do you have a better sense of what we are going to? Is this going to be the low-rate regime that we knew once we get inflation under control? Or is it increasingly apparent that this is a new paradigm and one that will really have much greater implications for assets around the world?
So I don't think we see a reversion back to the pre-COVID level of monetary policy. The last time I was on the show, in fact, it was very shortly after the IMF published a blog showing some of the structural drivers as to why, when we're through this surge, we may see a tack back towards a R star being lower than the terminal R. I think you see something of a tack back, but one of the things I said when I was appraising that IMF research blog was there are some big decisions on trade, on protectionist, the length of global supply chains, which are going to frame a lot of that medium-term, long-term outlook. And they're by no means predetermined. And all the political rhetoric I see sees that reinforcing those shorter supply chains, elevating the price level, and therefore R star does incrementally move higher.
Simon, before we let you go, I have to ask how much you're starting artificial intelligence as an economic input in terms of productivity, in terms of offsetting some of perhaps the frictions that we will see continue in the supply chains and in the workforce.
I am studying it. I don't profess to be an expert. A lot of economists overnight reinvent themselves as epidemiologists during the pandemic, or in the UK context as trade economists during Brexit. I don't suddenly, and I don't want to pretend I'm now an AI expert, but there are some decent lessons from history here in terms of the productivity potential of new technology come in and allowing a reprofiling of activity away from quite clerical, repetitive activities into more value-added activities. It's a strong empirical basis, but the problem is sometimes, actors in the market, including government actors, have a different idea. And so would I take what we've learned in the last few months and upgrade my productivity estimates? I think I'm going to need to see how that intellectual property is integrated into the wider economy before I make those calls.
Simon French, thank you so much, with Pamir Gordon as well. Before this Bank of England meeting, and an important meeting for those in America, we put more weight on the Fed because we're based in New York and American and all that. But guess what? This is an important meeting. Microdata, and I didn't know this, Norway's a lot about salmon. Like, you have a beverage and you have salmon and crackers. You're familiar with this. Norway's salmon up 26% from the beginning of the pandemic, and it's a real leg up from the late winter of 2021 in price. I mean, just you think about a smaller nation like Norway, far less people than I think what we perceive. And the answer is this inflation is tangible, and that's why they have to act.
Well, and you're seeing this also in the housing market. A lot of people saying that it's more concerning in some of the Scandinavian countries that have seen real price inflation. This, to me, is the concern. It's idiosyncratic, yes.
It's not.
But it's idiosyncratic
exactly,
for this nation and this nation and this nation. At what point do you start putting it together? And yeah, there are different features for each of them, but at some point, you have to start wondering, what are we missing?
Well, it's not so much what we're missing, but I totally take your point. I mean, we use Turkey as the arch idiosyncrasy, 23.55 on Turkish lira, some stability there for Mr. Simsek. But I do take your point. There's a point where this and that all coalesce together into what Adam Posen was talking about in the Telegraph today, which is just a higher set of inflation.
By the way, have you ever had gravlax and lefse and some of the other Norwegian delicacies? Lefse is the bread.
I've had some of it at gunpoint, but yes.
At gunpoint.
And Swedish
lutefisk.
too.
Anyway,
Yeah.
moving on.
Yeah.
I do want to say that one thing that is different about the U.S. is that the fiscal impulse is less clear. And I think that that's also what we're looking for as we talk about the recovery in Ukraine and how to deal with some of that. In the U.S., meanwhile, there still is quite a big fiscal impulse. It's starting to get withdrawn with the student loan deferrals. But this, to me, is the big mystery. Do you still have, working at odds, the fiscal side and the monetary side?
Yeah, I didn't listen to a word you said because I was imagining the Norwegian finance minister, the Norwegian finance minister sending team surveillance, one of those wooden boxes of salmon and all the other stuff you mentioned.
I
from
love
Norway.
that. And the berries, although that's more Swedish. That's more the lingonberries. That's more Swedish.
Okay, Velderie, Velderie.
I lived in Fargo, North Dakota, of course.
Yeah, that's what'll do it.
Yeah.
Bramo, Fargo, North Dakota, taken in the Scandinavian view. That is a view of inflation. We will hear from the Bank of England and, of course, comments from Governor Bailey. I don't think he'll declare victory today. Mark Chandler next. He sees rates higher for longer. Good morning.
The EU is one of the largest and wealthiest consumer markets in the world, and there are very few global companies that can afford not to trade in the EU. So as the price for accessing the European market, these companies need to obey European regulations. That's not surprising. But often these companies choose that they will extend the European standards across their global conduct and their global production because they want to avoid the cost of complying with multiple different regulatory regimes. So there are benefits to standardization, benefits to uniform production. So all the EU needs to do is to regulate the single market. And it's then the market forces and the business incentives of global companies that transform that EU rule.
analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
On the David Rubenstein Show, Peer-to-Peer Conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
Monitoring very carefully the possibility of additional tightening from the banking sector with respect to credit. It represents a downside risk for the economy, and I'm watching that very carefully.
Really, excuse me, gasping here. Interesting. It's the lox and bagels this morning from Lisa. Interesting conversation there with the governor of the Federal Reserve, very much thought to be the next vice chairman, Philip Jefferson. And it's interesting to see, and as Lisa mentioned today, a set of Fed speakers. This is after what we're going to see here in 14 minutes. But I'm sorry, the Fed speakers today could really add value here to the length, the longer of all this discussion.
Fed Chair Jay Powell said almost all Fed members wanted to raise rates further, thought that would be necessary by the end of the year. We found one who didn't, Raphael Bostic. He seemed to want to keep things on hold. So let's find out who the dots are, who wants to do what, and what that means in terms of some of the thinking behind the rationale.
We're before the Bank of England meeting. It's an important meeting. I'll not mince words. I wish John was here. He viscerally does it better than Lisa or I do. But it's going to be an interesting meeting, to say the least. And what's important about it is a linkage of equities and, more importantly, bonds, currencies, and commodities. Simon French just joining us, and now Mark Chandler joins. Mark Chandler is truly expert on these foreign exchange dynamics, chief market strategist at Bannockburn this morning. Marcus, what's sterling do here? I mean, Brexit was a 116 sterling. We have a new resilient, stronger sterling. What is your sterling call off this meeting?
Thanks. Good morning. I think that if the Bank of England delivers a 25 basis point rate hike, sterling may sell off. I'm looking at the swaps market, pricing at about a 1 in 3 chance of a 50 basis point hike. Like Norway delivered, 50 basis points, I think sterling could rally. But I think the real issue here is the trade-off. It's not so much, I think, the trade-off as far as 25 or 50, but I think it's whether with this higher than expected inflation number we saw earlier this week, whether Chancellor Hunt's perspective that a recession is worth the risk of getting inflation under control is really the key trade-off here. I think that's what we'll see. I think the UK, the Bank of England, is committed to lowering inflation, and I think they're willing to risk a recession to do so.
Mark, there is real tension in the FX market about whether further rate hikes actually mean a stronger currency or whether it incurs some pain on the economy that actually infers weakness. When do we cross that threshold? How is that balance changing as we head closer to a sort of a tipping point, certainly in the UK?
Yeah. I think that we see this, Lisa, in the yen. The yen is really the underperformer this year, and partly I think this is a question of monetary policy divergence. At the same time, last week when the Federal Reserve said the median dot pointed to a 50 basis point hike this year still, 25 basis point hikes, the market doesn't believe it. And I think that since the Federal Reserve met last week, the dollar has actually weakened. We've got the euro today above 110 for the first time in a month. We've got the Canadian dollar at its best level of the year. And so I think that the market's doubt. Remember, a few weeks ago, the market was pricing in cuts from the Federal Reserve this year. And now it says that the Federal Reserve, when the Federal Reserve says 50 basis points, the market's saying unlikely. And so I think the dollar has suffered for that. So I think we're in that mix that you're saying now, that rate hikes don't necessarily mean a stronger currency, but the market's got to have confidence in the central bank's forecasts.
Mark, you don't mince words. You say, and we talked to Simon French about this, the whole solution here for banks is less the level and the move up down, but you just say it as clear as a bell. They're going to go out longer. Frame longer for these central banks. Are they going to hold rates where they are, a little bit higher, for quarters, or do we go into 2024?
I think that's an important issue. And I think what's happening is that we're at the tail end. Whether you're looking at the Federal Reserve, or the ECB, Bank of Canada, Australia, we're at the tail end of the tightening cycle. Whether it's, many of us, including myself, thought maybe be done by the middle of the year, and now it seems like we're going to extend into later this year. Bank of England might be the exception, depending on what they do here today. The market's pricing in rate hikes into early next year, but still, when you think about the Bank of England or even Norway, they began tightening before the Federal Reserve. And many people were critical that the Federal Reserve was slow out of the box. But here's two central banks raising rates before the Federal Reserve and having to raise rates more aggressively now because inflation is really higher. Both the UK and Norway had new cyclical highs in their core rates. We know that the U.S. rate is slipping, the headline rate faster than the core rate. But I think that's the general direction, is that we're talking really about a few more months of tightening from, I think, the major central banks, with the Bank of England the exception on one hand, and the Bank of Japan the exception on the other hand, just being very slow to tighten.
Mark Changler, thank you so much. With Bannockburn today on short notice, briefing us before this Bank of England meeting 8 minutes away. Moments ago, and I believe we're the first to report to you on the mid-year outlook for Kalanovic, Kasman, and the team at JP Morgan. And they don't mince words. They're looking for a GDP slowdown. I'm verbaling this to you on radio and TV. United States down 0.8%, from 1.5% potential GDP. They look for a Q4 of 0.7. Same idea in the United Kingdom, 0.7. Japan does a little better. China, 5.8%. And critically, they say disinflation will be incomplete. And Lisa, that perfectly encapsulates the frustrations that we see over the last 24 hours with Norway, with Switzerland, and what we're going to see in 8 minutes with the Bank of England.
So here's the question. What does this mean for markets? And they talk about the frustrating read-through in markets that has not been logical. They talk about how volatility is abnormally low given all of these crosswinds and the likely higher inflationary outlook. And they don't necessarily see a massive surge in the VIX because there are these technical pressures ongoing. There is this sort of key question, and as I dig through this, I want to hear what they have to say. Are tech stocks the new safety plays in a higher inflationary environment? This is the oddity of the past couple of weeks that is absolutely turning on the head the logic heading into this year. Does this really have a new promise with AI that somehow makes these stocks immune?
I'm not there. You just busted my chops with this. But the answer is, and we're going to look at the Standard & Poor's 500 here from the JP Morgan mid-year outlook, and they go from 4410 where we are right now to 4200, down 5% there, and so that's pulling into that equity market. I don't have it in front of me, but I would call 4,200 now almost center tendency. You think I'm off on that?
Well, 4,200 is almost conservative now. That's almost bearish considering where the sea change is shifting to 4,500, 4,800 and beyond. If we're talking about 4,200, that means declines from here. That means chop, and that means potentially shifts in leadership.
Right now, we're going to get a preview here on the Bank of England. Joining us now with her perspective, and she's really been studying the makeup of this committee, is Lizzie Burden. Lizzie, I look at the Telegraph and Adam Posen taking the headlines this morning, looking for a 6.5% level. And that speaks to the oddity of your bank taking in those pesky foreigners. Is Catherine Mann the Uber hawk today between 25 and 50 basis points?
Tom, she might not be alone. She might be joined by Jonathan Haskell. He's been pretty hawkish recently, and some economists are seeing a three-way vote split with those two at that end. And then at the dovish end, Silvana Tenreiro and Swati Dhingra constantly emphasising this lag in monetary transmission, and then the rest in the middle, the 25 basis point gang. But as you know, Tom, when there isn't a press conference, when there isn't a forecast, sometimes the bank tries to communicate its messaging through the vote split. So look out for that, and I'm sure markets will be too.
Lizzie, thank you so much. We'll look to speak to you here in a number of minutes in England on the Bank of England. Futures deteriorate, -14, Dow futures -113 as well. And yes, I'm looking at the 2-10 spread, 99 basis points. It did breach 100 basis points here earlier this morning.
I'm watching two-year yields over in the United Kingdom, which are hovering right around the levels that they were right heading into and out of the 2008 financial crisis, 5.05% for the 2-year. And could that go substantially higher if the gaming out of 6% rates in the United Kingdom becomes more of a reality after this meeting?
John gets the dissent at the Bank of England viscerally much better than you and I do, but I think we can look for some fractiousness today versus the quiet that we get from Jerome Powell.
And not only would it be something, it's not only is it not tense, it's needed given the uncertainty of any good decision. We heard that from Simon French, we've heard that from many others. There really isn't a good option for them here today. They're hiking into weakness. The question is, do you want to torpedo the strength quicker in order to get inflation under control?
And it's going to be interesting to see the 2-year yield 4.75%, the 10-year U.S. yield 3.75%. And again, not historic, I can't say that, but rounded up, 100 basis point curve inversion right now. Dollar weaker, sterling 127.86. In moments, an important decision by the Bank of England as they see record high core inflation. Stay with us from New York, Bloomberg Surveillance.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
Today, I would say perhaps only second to AI right now, which is AI has got so much going on and folks are so excited about it. Climate tech is the hottest area to be in.
From the world of politics.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power at the end.